after this. So any final questions or any initial questions before I just dive in now that I've done stalling for kind of 5 minutes? Okay. And what I would say is feel free to interrupt me if you guys, if anything is unclear. If it gets just a zillion questions, then maybe I'll just end up saving it for the end. But yeah, let's dive right in. So with SMCI, this is kind of how I think of everything, right? So we had earnings, or sorry, this was guidance on January 19th. And the funniest part about this is when that guidance came out, I think it was after hours on the 18th, like the stock didn't even really move that much. And the actual gap up is really, really pretty small, maybe 10, 20 points. So that in itself is kind of interesting to me. And if we were to look back at the highs on all this, 360 was pretty much the highs from back on August 7th and kind of the same point on January 10th. So the earnings or the guidance comes out. Buying that 360 break to me is kind of a no-brainer. So I tweeted some of this, but I think there's many ways to structure this as a long. Like even people like Qualagi and everything, like they have their own views as far as like the EPs, the episodic pivots and all that. Like this is a news catalyst. This is the strongest sector in the market right now. We have seen Nvidia, we had seen Avago, both make epic moves on earnings. So I think the first thing, not that this is really going to be the basis of what I want to talk about, is you need to be open to being long on those trends. Same for when the ARM earnings came out, probably about a week later after this, you need to be really open to that these semiconductors can all just really explode these days. These earnings are super in play, the sector's in play. So buying through the 360 break is one potential strategy. You can also, off the open, this dipped red, then went back to green. Buying that crossover is one potential entry. And then depending on your time frame, like Christian Kolmagi, like he does kind of like a moving average stop. So he's someone, I think he does maybe like a 10 day moving average. So it's tighter than what I have on here, but he's someone that can definitely catch, you know, some of these really big moves as a result. And to be clear, the easiest, best money is always with the trend. So a lot of people on Twitter were like, oh, you know, like you can fight this trying to pick the top or you can catch the trend. I mean, I half agree with, I think this play is actually even bigger than the long. Like what people miss is you don't know that this play is just going to go up 200% from there. But the benefit of mean reversion trading is when something really gets extended, you don't need to predict. You can then just move to where the thing's going super, super crazy. So we made a pretty reasonable leg from call it the 360 breakout to 500. And so these consolidation bars, I kind of consider, and you guys can see my cursor, right? I believe, right? Okay, perfect. So these little consolidation bars, I would almost consider this the first leg. We break out at 360 and we go roughly 150 points. Okay, like no one's losing their mind over that. Like if you caught that long, like that's great. Then what ends up happening is on this bar, this was when they actually had earnings. And what was so funny about that is those earnings ended up kind of being somewhat of a sell the news where we gapped up big and sold off during the day. And so now keep in mind, right? The earnings, the guidance has essentially been out for a week. The earnings now comes out. And on any of these events, if it was so blatantly clear that this stock should be $1,000 or $1,500 or $2,000, like my questions to you would be, why are people not, first of all, bidding this up higher on the first day? Why are we having these consolidation days? And like, look at these little tiny bars right here. We have these bars where the range is $20, right? The whole day we're just chilling there. And so if this is such an obvious buy, like why are we not even having 2, 3, 4 really big days with all this capitulating, right? There's a whole week where you can buy this sub 500. So many people are like, oh my God, it's cheap, it's undervalued. Like no matter who you are, if you're buying this at 800 or 850, 900, 950 or 1,000, it's still dumb. Even if this eventually goes to 2,000, it's still dumb in the short term just because you could have bought this way, way cheaper. Like no matter who you are, it's better to buy this at 480 than 880. The risk reward is so much different when you're buying down here. So I would argue, yes, it's absolutely a swing long down here. But once you get I mean, past even 550, like it's fine to hold, but again, the risk reward on this becomes way, way different over time. And so we have the earnings, we end up kind of holding up fine, and then we start to go, and we're still having these small little bars, and we make another leg. So I would almost consider like 360 to 500 is leg one. We make another leg, then we start to really get going. Then we stop at around 800 again. And so this inside bar right there on this 2-13, I'd consider another consolidation day. And what's interesting is the ranges on these days are starting to become just as big as the initial earnings day. Like that is definitely not normal. And so I think it was actually on this day as well, this 2-12. What was really interesting to me is we actually had, or maybe it was even earlier, I can't remember. Maybe I'll pull it up. But we ended up having a closing print that was as big as some of the prints, the closing prints on the guidance day. And so a lot of this is like, it's really interesting in the sense of just how sustained the volume is that we're doing, right? Like how many times do you end up, if this is the big guidance that blows everything out of the water, this is kind of the earnings day, why are we still doing just as much volume? And what's so crazy is even on some of these days in here, we're doing essentially like a huge chunk of the overall float. I think the float is something like 40 million. Off the top of my head, and we're doing like 18 million shares a day still. That is very abnormal. Like again, if you're going to be buying a huge chunk of the float up at 700, where were you at, I don't know, 360? Where were you at 460? Where were you at 560? So all those are interesting to me. But again, none of these bars are increasing. So people might be wondering, why aren't you shorting earlier? I think that's probably one of the first questions. And I would say, nowhere was this capitulatory before these couple days. And so some measures of capitulation for me is I want to see the bars increasing in size. I want to see the bars increasing in volume. I want to see, I'm also using the distance to the moving average is one measure of overextension. And I'm also using the Bollinger Bands. So a Bollinger Band is essentially two standard deviations of price, at least on the default settings. And so this day on like 2-5, that's kind of one big up day. We're starting to get overextended, but I really would want a day 2 and day 3, ideally stretching far above the band. And so then we have these kind of little inside-ish consolidation bars. So anytime we get consolidation bars, I view that as price acceptance. So even though we go 500 to 700, once we have these 3 bars here, my interest kind of resets. To me, that's like price acceptance. It's no longer super, super interesting. And the other thing too, is the short side is so much more dangerous than the long. And so when I think about what's the distance to this moving average, at this time when we're at 700, the moving average is roughly, I don't know, 200 points lower, which is definitely tempting. But I also recognize that, hey, if we break out, the risk is still also really big, right? It can go to 1,000, which seemed obscene, totally obscene at the time. It could go to 2,000. So that's kind of why I didn't have any shorts earlier. So then we kind of like have these consolidation days. Like these consolidation days to me are very similar to the consolidation days at 500, where it just is a reset. That's price acceptance. It's not as crazy as people think. Okay, fine. The market says this is the right price. We then break out. We have one up day. We have a second day here. And this day was like a little interesting, but again, it's only kind of like day 2. And then we have that other inside bar. So again, we're not above the Bollinger Band. A short is always inherently more dangerous. These bars aren't accelerating. The volume isn't really accelerating either, right? Like on this 2-13 bar, the volume is actually less. So all those reasons started to keep me out of the short early. We then gap up above 800. And this is the first day where you say like, whoa, now we're really talking. And what I think is really interesting about this is the range on this day is the same range we had on the initial guidance, right? So like, who are the people that are just so loving this 2 weeks later that didn't love it back at 400? And now we're starting to get above the Bollinger Band. And now a huge sign that's, again, super crazy to me. You'll never see this. Like you guys can look at as many stocks as you want. How many stocks have blowout earnings, then a couple weeks later are just doing more volume than on the earnings report or the guidance? Like, it just doesn't happen, right? Like, you can't even tell that this was the actual earnings. That volume is nothing compared to what we end up doing. So this bar on 2-14, I would consider day one. That's where we're getting really interesting. Then this is kind of day two. And this day two is what sucked me in a little bit. And this actually ended up being decent losses for me. So let's go into the intraday for this. And what I want to point out, at least on the daily first, is now we're really, really far from that moving average, right? If this moving average is around 600 at the time, we're at 1,000. So that's massive, 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 massive. Like, by most technical measures, if you use RSI or whatever you want to use, now we're really, really talking. And the other thing that again, I would pound the table on is our first leg was 150 points. In just 2 days, we've gotten 200 points. Like, that's really, really amazing. If this is such a huge buy, why is nobody going nuts over it the first week? Why are we just chilling in the 480s if then somebody's going to launch at 200 points? Again, anything can happen, but it just makes you start to think, okay, now we're really extended. So let's dive into this 2-15 bar. Let's see. So maybe I'll do 213.
Hey, Lance.
Yo.
I know you're pulling up the 215 chart, but I was keeping track of all the volume. Like, do you mind just like talking about how, because I know generally in the past when you looked at similar setups, you would really want like exacerbated volume in the first 30 minutes or an hour to kind of indicate like a blow off top. Can you just kind of like incorporate how, because on that Thursday, I think we ended up doing like 25 million like volume by the end of the day. Can you just incorporate how like the volume was just almost like consistent with like the previous like day or like even like similar days?
Yep. So I'd say some general rules of thumb. For the most part, and this is intraday and on the daily, it doesn't really matter the time frame. I really love seeing volume that kind of is double like, I want to see the volume increasing, but the really ideal setups, when in the true capitulation, it'll do over 2x the prior bar volume. So let me see if I can even, so on this capitulation day, we ended up doing like 34 million. The prior day we did 25 million. And then the day before that, we did 20. And so the thing is, this is already doing such absurd amounts of volume where it's kind of like hard to, this can't really double. It would be super hard just because it's already doing so much. But what I do love is in this capitulation, the one that finally cracks, like, it's no coincidence that the highest volume bar is that capitulation day. And so one other thing to your point that really, and this is kind of what sucked me in on that prior day that I'm going to get to, I was really taking a close look at how much volume we were doing in the opening couple minutes, how much volume we're doing in the first half hour, the first like hour or so, and then by even noon. And because what I really wanted to see is that volume really, really dwarfed the prior days. And so on this 2-15 that kind of sucked me in, our volume started out incredible, but then midday it kind of died off and we were holding up well. And so that's when it started to become a trap. But let me jump to that day for now so we can dissect that further. So this for me was actually kind of the worst case, the way this traded. So let's see if this is good enough for now. So pre-market, we started to really ramp. And if you want to talk about a sign of capitulation, like, look how quickly we go from 930 to 965 off the open. Again, this previously, like around that initial guidance, we had days where we're not moving at all. So I do think it's pretty feasible. Like, I guess the other thing I would say is ideally most of capitulations happen over 3 days. You get the day one breakout, you get the day two extension, and then day three tends to be the exhaustion gap. And that's exactly what happened here. So I really on day two should not have been fighting this as much as I actually was. But the reasons why I were is because the volume were pretty great. And this was getting in the land of just so overextended, you can't really not be involved. but ideally keep in mind, I think the default capitulation pattern does tend to be over 3 days, which is what ended up happening. And so some people have asked, like, so essentially we open and then we fail. I think it's totally like, so another common pattern off the intraday is stocks will do a drive off the open, then can fail off that opening drive. And so sometimes I'll play the break of prior bar lows, or I'll also play the break of where it opened. Where it opened, if it goes up, then falls below there. So it looks like this opened around 945. It looks like we kind of dipped, then we pop and drive. So I think that 945 is a totally reasonable short. That is where I ended up initiating. And I think it's totally reasonable. So by the time we get down here to these lows, I don't think it's the worst trade, but it does feel a little bit chasey. Especially because right around the open can tend to be very whiplashy. Like, I don't view this as like a true consolidation. It's too close to the open. We haven't had real price discovery yet. I consider like maybe there's no perfect number, but the first, like, I don't know, 10, 15 minutes have a very high probability of whiplash. And 935 seems like a little bit too much of a chase, where 945 doesn't seem so bad. So we whip down here. So this is hard, where like we do end up ripping back up, and already that's a bad sign. So a lot of times I think about what percentile of the range are we hanging out in. And so if the range is essentially 915 to 970-ish, we're hanging out in probably the upper third of that range, and that's a bad sign. Like, you always want to think about what are the signs that your trade is working and working well. What are the things you want to see? What do you not want to see? And what I want to see is I want to see things holding below the moving average. I want to see things holding below VWAP. I want to see this stock making lower lows and lower highs. And so once this gets back up here, yes, we're within this range, but we're not really weak per se. So that in itself is scary. But one thing I really liked is the volume. And so this gets tough just because you can get stopped out there. And it doesn't surprise me, though, that this wicked up. Probably a lot of people covering stops then failed again. And this is where the trade gets dangerous. And this is actually what ended up being kind of my fatal flaw, is when this starts to present itself that way, where you get all the stops triggered and then it whiplashes back down, covering this high and covering the highs ends up actually kind of a suboptimal dumb game. Because if something's going to break to highs then dump, it's almost, you want to do the opposite. You almost want to like short the highs, if it's going to dump. And it can really influence you to do some pretty bad trading. And so when this broke to highs then dumped again, I thought, okay, maybe that's it, especially because the volume was pretty good. And so I ended up doing like another reshort in this range. Not for huge size, because keep in mind, guys, with these moves, as tempting as it is to catch the top, like, this stock is up so much that the unwind is going to be great. You will get second leg setups. You will get very clear setups. And one heuristic that I think is really important to keep in mind is the best trades smack you in the face. Like, if you're an experienced trader and you've got your playbook, you really do want to trust the stock to set up within your playbook. And so if we look at this price action, like, this price action looks like a total mess. We've got down wicks, we've got up wicks, we break to highs, then we crash. All of those signs are red flags that you should not be sized up in this. It's just really hard to control your risk. It's really, really choppy. And all of this stuff, we're going to end up later comparing to what the actual top looked like. And so then we kind of, again, we're just holding around the middle equilibrium around, call it the 945. That's not weakness. That's not really what I want to see. I want to see the stock holding down by lows. I want to see us breaking lows and holding below that. So it's a lot of red flags so far. Then the other red flag that happens is past like 10 a.m. The volume starts to really die off. So part of what made me so interested in this was the volume we were doing. Again, I was comparing this to the prior day, and I was also comparing this to the volume it did on the earnings day. The earnings and the guidance, those were like super important comparables, just to see like how crazy are we? We're now up 200% higher. How many people are really turning this float over? Now, people might be wondering, why is that volume important to me? And I would say the reason why that's important to me is because the average price of the holder is turning over. So some people might be holding this forever. There's no price where they're really going to sell. So let's say the actual float of people trading this is 20 million and actively exchanging hands. If this does 20 million shares at 400 bucks in a very simplistic manner, again, it's just super simplistic. I get it, but you can kind of assume the average price is $400. So then when it goes up, everybody's kind of in the money. But when you're doing huge amounts of volume at 950 bucks now, the average price of the holders trading and engaging in the stock, that average price goes from 400 all the way up to 950 because you're turning over the hand so much. So if that finally cracks, the percentage of people that are going to be out of the money and potentially significantly out of the money is way, way, way increased, right? If this was just doing one share a day, well, guess what? The average holder's price is still going to be 400 bucks. So the fact that we're turning over that float so much, the way I think about that is the average price of the holder is up, 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 up. And so nevertheless, we're not really cracking. We're holding above the equilibrium. And so then we're holding really, really tight up against these highs of around 372. And so this is where if we broke 372, I was going to be out and just probably done for the day. And so what ends up happening is we failed to break those highs. And once that turned, I hit a lot at around 960. And on this crack, like that's a huge crack now. The volume wasn't so amazing, but that's a really big fail. And we finally held a range. So that was super interesting to me. So this is actually where for the first time I got really, really aggressive. Not that this is so great of a pattern. Like ideally, like the thing that would really confirm it for me is we need to take out these lows. But the nice part is now that we finally held a range is I can get size here and give it, at least give it to a defined stop. So let's see. So the other thing I did was I got into the puts here. This was on a Thursday. And so we're at 950. I ended up going into those 850 puts. And what's so amazing, and we'll talk way, way, way more about the options where I think the largest opportunity was for the stock. But those options were priced at about $3. Now, the thing is, this stock has been up so many days in a row. If this is going to implode, it is not going to go down 2%. This thing is going to go down 10+% and likely have 2 down days in a row. For something this euphoric, for something that's had this many legs and this euphoric a leg and is doing this much volume turnover, the probability you get a real meltdown and potentially 2 days is very, very high in my experience. So to be able to buy on a Thursday, the 850s for like $3 was super appealing to me because again, if this cracks hard, in my opinion, and we'll go back to the daily chart at some point, there's no reason why if this cracked, that couldn't have been at 850 that day, which sounds crazy to most people. And I think if you talk to the average market, like the average market maker, like people wonder why was this opportunity there in the options? It's because people don't necessarily have a day trader's experience and playbook and views of everything. So it's like my probability spectrum of what the outcomes could exist does not necessarily need to match what the market says, right? On a stock that goes up every single day, traditional markets will say the value of a put gets less and less, right? And you even see this in the overall market and even the Qs, right? The more the market goes up, paradoxically, the cheaper insurance gets. And by insurance, I mean puts, right? So even in SPY, QQQ, we go up. If we were to do 300 up days in a row and go euphoric, the puts would be super cheap, minus just the vol increase because you're covering so much, but that's actually the exact wrong thing, and like the market makers, they're kind of delta hedging all of this. What does delta hedging mean? It just means that even if like they're just collecting the spreads on this, they're shorting whatever their exposure is in the market and they're ending up with like a fairly neutral position. But that's actually going to be a dynamic that we get into a little bit more. But point being is like, the options market doesn't need to be perfectly priced. It's just supposed to reflect volatility and whatever spread for kind of the market makers or whoever to just hedge out the exposure. That does not mean it needs to be perfectly priced. But so that is when I first got into the options, and that is going to end up kind of really biting me in the ass. But we'll get to it. So we kind of fail. We don't like another bad sign is when we break this 940 low, we just immediately go right back up. And before long, we're just holding right back above equilibrium. So this is another red flag. So if you want to see like the list of things that are not good signs, it's pretty much everything this day. You know, we're not making lower lows and lower highs. We're not holding below a moving average. We're not holding below VWAP. We're not breaking lows at all of the overall range. So all of this starts to end up being bad. And so then this is where I started to get in trouble is we broke to highs here. And so I covered some of my stock, but because of this pattern of break to highs dump, it's kind of like super, you don't like you that it traps you into making really bad decisions because you almost always want to take that stop if we break to highs. But if it's just going to dump, you necessarily don't want to do that. So I covered a little bit and then we do kind of dump and you're like, okay, like that was smart of me. But that can get you into trouble very quick. So what ends up happening is this stock ends up just slowly grinding higher. And so now essentially we made a higher high, a higher low, a higher high, a higher low. So the trend is up at this point. Like I would say the second this starts to happen and we get into this range, the trade is pretty much over. So this is where I took a big loss on my stock. So if you remember when I showed my P&L before, there was like a huge realized loss in SMCI. So that was from this day where I shorted a huge chunk here, and then I'm just getting out around here. And so then the other hard part though is because this thing is having these fails, I felt those options were so asymmetric and were so close that like I didn't really want to close that out necessarily. But the problem with the puts is they end up decaying. And we end up closing pretty damn strong. Like there's like if you want to see a bullish chart, the slope on this is effectively like, I don't know, positive 0.5. If you look big picture, like this is the best fit line. We're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Like this is not what you want to see if you're short. This is a very, very steady up move. And the way we're holding up here, it just makes me have zero interest in holding short. So what I ended up doing was even because of even the puts, I ended up closing those thinking that, okay, I can always just reestablish them the next day because of course, you know, they're just weeklies. They're going to be zero potentially. So if this were to go to like 1200, an 850 put might be really, really bad. It might just be totally irrelevant. So overall, what I would say the big signs that like were bad was this was day 2 of that breakout essentially. The volume sucked me in initially, but then as you can see, the volume really tapered off the rest of the day. That's not good. Oh, one other thing I would add that I'm also going to get to, if you were watching the box, this had large NASDAQ bids. I don't remember the size or the prices, but all off the, and maybe someone can remind me, but all off the open, so much of the selling was being absorbed by these NASDAQ bids. And that's going to become really, really relevant over time. I tried.
There were like 10,000, 15,000 blocks that I remember was soaking.
Yep. And so who's gonna, what did we see 2 days later down at 700? Does anybody remember the large NASDAQ offers that we saw? Who thinks that's coincidence? It's definitely, in my opinion, not coincidence at all. And so if you were to ask me, and again, I really try not to hypothesize, like I don't think there's a ton of value in making assumptions that you can't prove or disprove. But if I were to take a guess as to what's happening, and I'm sure there's some like pro market makers out there that can kind of really give us good insight, but I don't know, I'm not one of them. What happens is you have so much exposure out there in the options market. And this is where I ended up having a tweet about gamma squeeze and everything else. This was very, very reminiscent to me of some of the action we would see in GME or like any of the tickers that end up going nuts on call volume. Like if you recall Lucid that one day on the Saudi wealth fund rumor. Like you'll see some tickers that attract a massive inflow of volume. And we saw this a lot in GME. And then what happens is when these stocks gap, what happens with a gap is people have all this options exposure, and when it gaps, your deltas, their exposure changes with the price. And so essentially what happens when the stock gaps is they need to then do a huge amount of the volume to kind of close out their, not to close out, but to neutralize their exposure. And so my guess is that a lot of this ended up being some market maker or someone that had a lot of options and exposure, and when that gaps up, they then need to get way longer than they otherwise were before. And so we would see this in GME where it would make these huge kind of moves and then just hold trend and really be well bid and well supported, and it just couldn't break. And that's what this price action kind of reminded me of. And actually the same NASDAQ bids we saw here, they were also there on like prior days. I can't remember anymore, but that was not new to this. And when I started to hear like, oh my God, these NASDAQ bids are back, it was that was a really bad sign where it's like, oh God, is this just going to hold? But at the same time, the thing that makes this tricky is because there's so much options exposure out there, once these things do crack, the same way, like you end up in these liquidity vacuums where when it does crack, if this were to drop 50 points super quick, or say it were to halt, limit down, and gap down, the people with these exposures end up in the same trap where when you're skipping through price so quick, they can't neutralize and hedge their exposure fast enough. So that's what makes it a little bit tricky, is when these do crack, it's going to really go. And I think that is a dynamic that's compounding all this. So if you were to ask me, like, again, why is this stock like why is this stock up 200 points in 2 days over the last 2 days? I would argue a lot of that becomes this feedback loop with the options where people have all these crazy bets out there. Oh my God, it's going to 1,000, going to 1,000. Those deltas initially are super small. Like the amount that needs to be hedged ends up small, but once you start to approach 1,000, it's like, oh my God, those deltas are approaching 1, meaning that the options becoming in the money. And so that's what I think leads to so much of this feedback loop price action. And so when we closed so strong on day 2 update, I felt very likely that we were going to gap up the next day. And because this day was very controlled. It wasn't, right? We didn't really do anything euphoric. It was just, right? The slope is plus 0.5, very steady. So I felt it very likely we would gap up. I didn't have a strong view on how far we would gap up. I mean, I don't, like at this point, price is essentially breaking down and it becomes extremely dangerous, extremely dangerous to hold size short. Because again, the trend is still up. You're still fighting the trend. And price is becoming less and less meaningful when you go 200 points in 2 days. So I would not have been shocked to see this at 1,100. I would not be shocked to see this open 1,100 and then go a symmetric 100 points. If you were to ask me what would have been ideal, I would have really loved to see a $100 gap up, a symmetric $100 move, where I can then short the kind of prior bar low turn and then really kind of let that unfold. So let me, before I, let's just go to the next day, then we'll do more stuff on the daily. So a couple things that were interesting. We do end up gapping up. And so this is what killed me, is I ended up just passing out, because it was, again, the market was so bad and the sleep deprivation. And it's like, God, am I even going to trade well if I'm sleep deprived? So it was awful. And that cost me so much money. But the way I view this is now we're finally on day 3. Day 3, and you can nearly guarantee the volume is going to be ridiculous on this day, right? There's no way you gap up there and don't do a ton of volume. And so the odds that this is going to be the top, like, and I have this in email proof form because I was talking to Katz about whether I should trade or not. And I even said, like, look, I think it's 90% chance this is the big day and it cracks, but it's just, how can I stay awake? And so even pre-market, it's interesting that for the first time, we kind of have a little bit of a dip and we do our little pop off the open, but the speed and the strength behind this is way, 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 way different. And so what we end up getting is kind of like a much rounder move. It's not so sharp. And what I would say is these, like, think about all the prior days. On so many prior days, we would go up like yesterday, and we would go up and never break those lows. And so finally something is different. We're finally able to break the lows, and the volume is massive. So the first place where I would consider, like, doing prior bar lows on this, like, it does end up working, but I'm not so interested because it's not that sharp or capitulatory. It's just too steady. I don't want to start churning, especially when the trend's just kind of up. But that first break of trend is when we break to these lows. So call it 1025. And the thing to keep in mind is, like, this stock is up so much. Like, it's really hard. You're not really going to, if you short 1020 or 1015, you can't feel like you're chasing. Just because the stock, the reward could be so big. Like, if I were to pull up the daily chart, I'm sure the moving average, which is kind of my big picture target on the daily, is hundreds of points away. And to think about it, we were just at $800 2 days ago, So you really do need to have some imagination. And what I would be doing is, you can either use 1025 as a level, or you can use prior bar highs. Or if you're doing really big picture, you can just structure it to the highs of the day. I don't think it's that crazy to risk 60 points against that, or I guess 55 technically. I don't think that's that crazy at all. Now, the other thing to keep in mind, what made this opportunity so special, more than the equity, which was good, but now this happened so that it fell on a Friday. And so again, all those 850 puts, when we're now gapping up another 50 to $100 higher, those puts, like, it's just simple math where, like, the traditional options market based on vol and everything else, they're going to pretty much write those off, right? Like, oh my God, we're 200 points away. What's the odds that just today's the day when we go up every day? Again, the options market does not necessarily have the same view that a day trader may. It doesn't have the same experience. That's what makes a market. And so a lot of those puts were priced so cheap. And the other beauty about the options that I think people shouldn't underestimate is just the spread on the stock is a couple points. And if you're going to risk 2 highs up there, that's 55 points. The asymmetry you get in the options market on some of this stuff, especially on a Friday, like, again, if this was a Monday, I don't think the opportunity is generally there. I'm still going to keep an eye on them and see what they're priced at. But, like, you're able to buy, I mean, I'd have to go back to the pricing, so don't quote me on this, but you're able to buy stuff for, like, $5, $10, $2, stuff that could very feasibly be worth way, 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 way more. And even when you look at the daily chart, like, this can really collapse. This stuff doesn't, guys. The daily chart doesn't, like, again, once this unwinds, and again, I would argue especially with the options market, like we discussed, all those $1,000 calls that are $60 in the money, $70, $80 in the money, when that cracks 1,000, all of those quickly stand the chance of being worth totally zero. So if somebody is on the other side of those options and the delta up here is 1, within like 10 minutes, they might have this huge exposure to be hedged on that. Then when that just starts melting, their exposure is changing so quick. So for them, it just creates this massive feedback loop. And guess what? Do you know how many day traders are out there waiting to short on weakness? So you just can't underestimate how far these cracks will go. The other thing that I would point out is, like, I think as far as a intraday trade, this is kind of the first big entry. The other place that's you can consider, at least for the daily chart, is when you break into the prior bars range, which I guess the highs were like 1,000 on the prior day. I would even argue that if you miss it up here, not that this set up so perfectly intraday, but if you're going to do a daily swing, I would still argue that shorting $1,000 and giving it to highs is still very worthwhile. And, like, I just would emphasize, like, you can't forget how much meat is on the bone in this trade. This is a stock that's made so many multiple legs. It's not just going to have, one little down move and that's it. Like, the probability of this going full unwind is huge. My traditional stop, as many people knows, is prior bar highs. This held prior bar highs incredibly well, incredibly well. And so that would get you out here, which I think that's an amazing cover. What's also interesting is this stock then goes from 1100 to 860. That's a really, or this was, sorry, 1080 to 860. I misread that. That's a really huge move, right? That's like 200 points or so. And look at this bounce. We go from 870-ish to 920. And so again, like I said before, I really think of things as far as the ranges and how much is stuff moving overall. So this couldn't bounce even to like, my default assumption is a 50% bounce or to the moving average. This could not bounce whatsoever. And so much to my heartbreak. Oh, so here we don't really go to lows. We kind of do a double bottom. Oh, so some people might wonder, like, is this a worthwhile buy? I don't think it's the worst idea if you get long here, but you really don't want to be stubborn because if this really unwinds, it can just keep going. In no way is this super overextended, right? Like it's not as if we're way below the Bollinger Band. And again, on this daily chart, you do not want to just say, oh, you don't want to buy the dip the first day it cracks, right? The stock's up 3 weeks in a row. You finally get the first crack after the biggest capitulation ever. You do not want to be quick to buy that dip. So I think I don't love it. Like it's not the worst idea, but you just can't get stubborn. If you're gonna buy size anything here, I'm buying small size, and I'm definitely getting out if that level breaks. So now we double bottom, and I wake up probably somewhere in like here-ish, and here's what's interesting to me is this melted huge. We have a very weak bounce, and now we can't even break this range, right? Of this huge range, we're staying in that lower quartile. And we're starting to really tighten up. And so often when these things unwind, it's very rarely just one leg and done. In fact, I think most people tend to underestimate how often it is that you can kind of get that second leg later in the day. This wasn't even that late in the day, but a lot of times people will take their eyes off these stocks. Then at like 3 p.m. or something, it'll crack and it'll just really melt. And like, there's just no excuse to not have an alert in so that you see this when this is breaking. And so the one thing I did is once I woke up and I assessed everything, at this point, the market's open only a few more hours. And so those 850 puts, like this is what's so crazy. Those 850 puts were only like, I think I was able to buy them at like $2.50 to $3 or something. But like, you need to understand, like, again, as far as my probability spectrum, given this unwind and given that we can't bounce and given that we're just holding in this range, my default assumption is that this will make a lower leg. So the options market, if you start pricing an 850 put for $2-3, like if this were to make a second leg, I thought it was reasonable it could go to 800. And so now think about this. If it goes to 800, that put is worth $50. Right now, the market is trading it at $2. So that's essentially pricing a super small probability. Right? If that's going to give you 25x, 50 is 25 times $2. That's effectively saying there's a 4% chance that's going to happen. Again, I actually view that as the base case. I'm not saying 100%, but I think it's probably a 60-70% chance that makes a second leg. So when my viewpoint is that this is 60 to 70% likely, and those options are implying a 4% chance that happens, that is a huge difference in how the pricing of the option is. And so what I ended up doing is, I was still licking my wounds from the prior day because I lost bad on the equity, which you guys saw. I lost bad on the options. And so I wasn't, I probably risked too much the prior day. But I recognized that, oh my God, like this is so asymmetrical. And so I went back into those 850 puts, and then I kept an eye on the 865, and then I shorted the 865 as well. And just for equity. And that's where I made back that equity gain you guys saw. And so I didn't end up holding anything perfect. I think those The puts are especially hard to hold because they're going to be expiring in a couple hours. So I don't have some perfect advice on how to hold this. I did feel like this could definitely unwind, and I wouldn't have been shocked, honestly, if this even broke 800 and unwound further. The main point I want to make is don't underestimate how far this stuff can go after stuff like that. Because again, you have all those options unwinding. It's just a massive feedback loop, and it's just been up so much. And if there was like a even more time in the day, a general rule of thumb is a symmetric leg. And not that this was going to happen, but like, let's put it this way. For me to want to get long, this is kind of a 200-point range or so. I probably would not want to get aggressively long unless it like capitulated. Like for me to be really confident, really, really aggressive, I would need that probably, like 700 or under. So now let me take a little pause and answer any questions before I go into some of the other stuff. But yeah, any questions,
Yes,
anything I should.
Lance, I
Yeah.
have a question. If you
Yeah.
were awake that day and you were going to buy puts, would you still go with 850 puts, or would you have gone with something like 950 instead? Because 950s were trading around like $3 when it was at 1100.
Yeah, yeah. I think the 850s would have been too much of an imagination. I think the 950s are pretty reasonable, or even maybe the 900s. But yeah, I would not have gone to 850 at that time. No. Because I mean, here's the other thing why the options are beautiful is like, again, my probability spectrum is not the same as the markets. If this cracks, this is not going down 10 points or 20 points. This is going down 100+ points. And so when you tell me you can buy the put, the 950 for $3, that is pretty much the spread of the stock. Like if I'm doing any equity short ever, just to cover that, I'm probably paying $2 on the spread. So if you're telling me I can get like asymmetric size, if with the 950 put, like those are so incredibly juicy to me, right? Because like even if you short this 1025, again, like to truly give it the big picture stop, you're risking $55. I would so much rather have 20x the puts, And what's so crazy, like, so when this, it's disgusting, but like even when this was here, so both days I ended up buying 3,000 puts. So think about that, 3,000 puts when those are in the money, that's a delta of 300,000. For every dollar that stock goes down, you are making 300 grand, right? So when I bought those 850 puts for $2-3, like if this goes and like, so people, when I said, oh man, the original puts I bought the prior day would have been worth X or whatever, like think about that. If you buy 3,000 puts and it goes to 800 and they're 850s, that's 50 points on 300,000 shares. That's literally a $15 million trade. And so even the trade I put on once I woke up, if I held it, which I definitely didn't, I was scalping that out way earlier because it's just too scary to hold into expiry. But that at one point at 246, that exposure that I bought for probably 600 grand was worth $15 million, right? Like think about how little of a leap of faith it was. Okay, this stock is cracked. It's day one of the down move. It can't bounce. I'm placing a 600K bet. Maybe it was like 650K. Again, that's not that crazy that it goes to 800, but that's what the options market was saying would never, not really never happen, but the options market said a 4% chance. And the beauty is that asymmetry. Imagine, like, let's chop off some zeros. A $6,000 bet, which I think for most traders is totally feasible. Even this late in the game, that $6,000 bet would have gone up over 20x. That's still amazing. So yes, to your point, I would have been going probably 950s. I think, and I think I think it's also just important. Like that's how I'm thinking about this stuff in my head. Like, where could this go, and what would those be worth? So what does that asymmetry look like? And I think it's also important to work backwards and say like, how is the options market effectively pricing this in, right? If a 950 put is worth $3 and you think this could go to say 900, essentially the options market is pricing in a sub 10% chance of that, which is amazing. like again, it's day 3 now. Day 3 is definitely the most common odds. And the other thing, let me jump to the daily. Look where we are. We're all the way up there. We're so far above the Bollinger Band, and the moving average, we're now 100% away, right? If the moving average is at 650, we're not 100%, but we're really, really far away. Is the point.
What was surprising to me looking at the option activity, the open interest on the put side was very low activity. That's why I kind of figured that if they do work, they're going to print so much. Like most of the activity was on the call side.
Yeah.
Like,
yeah. And I'd argue that's exactly what was driving this higher. Like in my mind, I don't really view like these 3 days as being like, I don't view these 3 days as being fundamentally driven. Like there's no way of verifying this, but I truly believe that these 3 days were a lot of just option skew and the delta hedging. And it speaks to that. And now think about how many green bars we had, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, and the range we've covered. And like the way I think about it, right, is leg 1, leg 2, leg 3. Then this leg just goes like 350 points, 300 points or so, so late in the game. Like it's just, where were all these, whoever's buying, where the hell were you on these days? Like that's how you really gauge the euphoria. Is all of this was pretty steady, that up move, but then we're steady, but then to just go boop, like, I'm not saying SMCI won't be $1,000 stock, but I am saying that like any true buyers here, where the hell were you the prior 2 weeks? But yeah, the options were like the equity you can definitely crush, but the options were probably a very special, very unique situation there.
on Thursday, when you were shorting it with equity, would it have made sense like to hedge with some of the 1,000 calls so you're not like getting in and out so much?
The calls were just so pricey though. The calls were just so pricey. So,
Okay.
and the other thing too is if I'm short, I want full exposure that's going to go down. So it's like, if I'm going to be hedging my short, I'm probably not that confident in the short. And I'd rather trade less size and not hedge. Yeah, because it's just too expensive a hedge, whatever those were priced at.
Okay.
And again, I don't think it's going there anyways. So it's like, if I think this is going down, why would I buy the call? Yeah, it's not my favorite to do stuff like that. I would just rather size down.
Hey Lance, Sergio here.
What up, brother?
What's up, man?
What up,
Hey.
GCat?
Listen, 1025 was like a great entry, like you mentioned. But let's say you're piecing into this and you only got like, I don't know, a third of the size that you wanted there or something. How would you go about, were there any other add points that you thought were good?
Yep. So these highs effectively were 1,006. I mean, so by the way, like for the most part, when I talk, I just kind of round. Let's just call 1,006. For something like 1,006, I'm just calling that 1,000. But sometimes I round, sometimes I don't. Like sometimes the level is important. Like I think like this prior breakout was 360. I'm gonna wait for 360 rather than buy 350. But for something like 1,000 and 1,006, it's kind of just whatever. So I do think breaking into this range, that's almost like a technical confirmation. It's called the oh god, I always flip it. I think it's called the oops up day, where it gaps up and it breaks back into the range. Or no, maybe it's counterintuitive. I think that's the oops down day is technically where you gap up, then you go down. It's I don't know. I always confuse the two, but that's essentially a technical pattern where you gap up and then you eat back into the prior range. So that $1,000, like even for the $1,000, I'd argue, depending what stop you want to use, but I'd argue shorting 1,000 against 1080 is a totally fine trade. Yes, it's large risk in dollar terms, but the probability of that going back up there, I think, is very, very low. So I do think that's one place to add. Let me pull up this chart for you.
And I guess like just a quick tangential question again, like, is this normal out of the kind of data set that you have, these things unwound in literally like 10 bars, as opposed to, I feel like in 21, things would be a lot more choppy, would hang out for a bit longer.
I mean, I think when you look at data sets, you need to, the number of data points where this is in the same arena as other stocks is very, very low. Like I would say probably the best comparable for this is like maybe a GME, but I don't think there's too many beyond that. Because this really was crazy, crazy euphoric. Like there's not too many tickers that come to my mind as far as being like this. I mean, I do have in my Evernote like a whole category of exhaustion gaps, and not too many are this extreme. So I would say when the more extreme something gets, when that does crack, the crack's going to be so much more severe. Because again, there's just there's everyone's going to be like anyone that's long waiting for the turn. We've been going up for 3 weeks. So if anyone that's waiting for that turn or that down day, well, everyone's going to be running for the exits at once. And I would make the same analogy with the options that like when this starts to skip price and implode, just with the amount of options that needed to that were all the calls that are then kind of quickly changing in exposure, I'm not surprised that this cut so quickly. I do think once this, and keep in mind the absolute best trades, this is another really good heuristic, but the absolute best trades immediately go in your favor. And so I tweeted about this somewhere. The prior day fighting this, that was a fight. Like every single bar, you're just praying like, oh my God, why isn't this going down? Like, why isn't this holding? Okay, we finally dumped, like that should be it. That should be it. But then we keep on reclaiming. We keep on having bids pile in. We keep on having the NASDAQ absorb it. We keep on having higher highs and higher lows. Like that trade, yes, the prior day, you were fighting. The best trades work and they're gone. Whether it's breaking news, whether it's an order flow inefficiency, whether it's a pattern, the best trades, they're gone. And so this breaking 1025 and just that's just, I think, significant to just how good this opportunity was, and that then everyone's piling in after. So it doesn't surprise me. And I would argue that the best trades, like, yeah, you're like, think about SMCI, think about SMCI, NVIDIA, or ARM on their breakouts. SMCI breaking out above 360, it was gone. Why was it gone? Because everyone's piling in to get into that trade because they all want in. So I would argue the really best trades don't have the pullbacks. This didn't have any bounce until way lower because guess what? If this was going to start to bounce, people are just shorting the shit out of it. You know, once this turns, everybody wants 1020s, everybody wants 1015s, everybody wants 1010s. Then you break into the prior bar highs and the prior bar range. So everybody wants 1,000, everybody wants 995. So I'd argue that dynamic. Then you have the options that need to re-hedge and adjust their exposure. So it's like, you know, I'd argue that's what makes that dynamic just melt like that.
Hey, Lance, I got a question.
Yep.
So when trading this on the 15th and 16th, knowing that, you know, you might have to try this multiple times, how are you thinking about your sizing while trading stock?
Yeah, I mean, I think like the important thing to recognize is, again, I think it's good to keep in mind that in an ideal capitulation, it's the third day. Day one's the breakout. Day two is the second, more euphoric day. Day three is the exhaustion. And I was probably way too aggressive on day two, knowing that, especially when it wasn't going in my favor, especially when we weren't holding below VWAP, we weren't holding below the moving average. So I don't think like the further these plays go, the better they get. And that's something we were talking about on the trip where like some of the younger guys, they were like, oh man, like, you know, I'm licking my wounds. Like I'm not going to bet as much today. So there was one guy on the trip that was, I mean, definitely one of the really big whales. And like, he essentially said like, dude, like, why would you risk less if it's getting better? And like, it's one thing if you have your own personal risk rules or if you know, loss limits or whatever else, but in general, in pure theoretical expected value terms, the that day 3 capitulation, the expected value and the probability of that working was just so high. You do need to risk more. Or you don't need to, but you really should be risking more. And so I would say on day 2, like, you want to risk an amount that isn't going to super mess you up for the next day. And I kind of broke that rule and got sucked in. But so, yeah, I would say the other thing too is you want to save most of your risk for when it's working. So when on this prior day, when you're still in that range, let me pull it up real quick. Like, I think it's totally fine to take some stabs in here and to have some light size. But then once we break whatever the lows are, that's when it's game on. Until we break that opening range, it's not game on. And so I would say this is yellow light. Like, all of this is yellow light. Once we then are in here where we're making higher highs, higher lows, higher highs, that's red light. You really probably want no exposure at this point. Maybe even you could argue by here you want no exposure. But this is maybe yellow light. Green light would be if we broke, call it 920-ish, 915, whatever that is. Until we do that, you really don't want to be super risk on. And I would argue even on the next day, right? I would say this is probably yellow light, no man's land. Once we break 1025, it's green light.
Cool.
And even more green light. It's bright, the brightest green light you've ever seen, because now it's day 3.
Hi, Lance.
Yep.
I have a question regarding profit taking on the 865 break.
Yep.
Prior bar size obviously doesn't work. So how would you approach it, especially with regards to the trailing stop, so that you don't hemorrhage premium during consolidations?
Yep. So I traditionally do a prior bar highs of 2-minute bars. And so I simplify that a little bit just for like TikTok videos and everything else. There are times when it's not going to be sensical to initially do prior bar highs or at all necessarily. I think it's just one base case stop. And so this level here is 865. And so this here is an example where this breaks prior bar highs, but we're so close to 865 that you might as well just give it to the initial support break, right? And so I would essentially argue, like, if you were to use like some thought experiments, let's say prior bar highs was 864. I definitely don't want to cover 864 when 865 is the true level, and we haven't really trended yet. So because we're so close to 865 and we haven't trended, like, I would argue prior bar highs here is beautiful because we're holding that trend for so long. When we've covered so much ground, the reason why I want prior bar highs, because if that trend changes, this could really, really bounce to 980 or something, or 1,000 or 1020. Who really knows? Unlikely, but it could bounce really far. And so what I would say though is like, oops, let me just fix this. Oops. When we break whatever this price is here, like 856-ish, whatever it is, we're still so close in the grand, like, you almost can't, like, when I can't even see that prior bar break on this chart. Like, in the grand scheme of how far the stock has gone and this being a 200-point move, like, I really want to just give it to 865 essentially and let this unfold. How far do I want to eventually take profits? I don't know. Like, I would say another alternative is using the moving average. So I think it's potentially feasible that once we sit here, then break there, maybe you cover. I probably, the way this was, especially consolidating in here, I'm probably not holding to 800. For the most part, I tend to just catch the legs rather than the really big picture move. So I don't have a really great stop that was going to catch me the whole way. I do have a good argument for why I wouldn't cover right there, but then no, I don't have some perfect one. Sometimes what I might also do is I want to just see lower lows and lower highs. So, okay, this is a lower low. We don't really bounce anywhere, kind of lower low, lower high, then even potentially breaking right there, which is kind of the same area as that moving average break. Maybe I get out there anyways. so yeah, no perfect system for me out there. I'd say the 2-minute bar high is really just best once we're already trending, and I'm not going to use it when we're just so close to the breakout or breakdown level. Does that kind of make sense?
Absolutely. Thank you.
Yep. What else for me before I kind of dive on into other stuff?
I have a question, Lance.
Yep.
When this thing was like in the process of breaking down below that 865 level, how do you kind of like deal with, like, obviously not for options, when the stock's like in the mode, because it was in the mode down there, like,
Yep.
you know, we like, if you're watching the box, we like brushed up against the 865 guy, and there's like a big like bid, no one could hit it, right? And we bounced off it like 5 or 6 points like a couple times, and my only worry was, which I kept hitting and covering, my worry was once we broke that 865, because it was in the mode, it's possible I was worried about not being able to get stock to like 860 or below or something. How do you kind of like navigate, you know, do you kind of like sometimes step in front of that like actual break because we're in the mode, or do you ultimately just want to wait even though it's in the mode and you might just get gapped out and miss like good entries?
Yeah, I mean, that's another thing where it's like a really gray area. Depending on how good the pattern is, the better the pattern is, the more eager I'm going to be to get stock beforehand. In general, I never want to do that, except this is a weird market structure thing. It's only because of that market structure thing I might consider it. So things I would be considering is below 865, how much liquidity is there? Is there a decent bid at 860? Like, I don't mind shorting down to 860. I don't think that's bad slippage at all in a stock like this, considering the spread's probably a point or two. So I'm really kind of just weighing, like, how good is this pattern? If we sat a couple more bars really heavy on this, like, I actually think it's a nice thing. These little bars here, like, this is a really good sign. But you know, just look at this range, right? This bar, the high is 874. So like, you can so easily lose 10 points just holding that. So like, I'm probably just going to be queued up with my orders, and the second that breaks, or when it's hanging on by a thread, I'm going to definitely just slam that in. And like, I think people are kind of too afraid to price more aggressively. Like, in a stock that's doing this with like a 2-point spread or whatever, like, it's not crazy at all to risk down to 860. You know, like, it's like, you need to be willing to, I'd much rather hit 860 than hit 865 and cover 10 points higher when it hasn't truly broken. So no perfect answer. I think that's just one of those things you always need to fight and struggle with. And it's just the reality of like a silly market structure thing. So yeah, I it's no perfect answer, but I'm probably just trying to wait and then catch it.
Got it. Thanks.
Lance, one last question.
Yep.
How would you split risk between equity and option on a setup like this? Let's say, like, for example, I was willing to risk like 5% of my account on this trade. How much would you kind of split it between the two?
God, I mean, I just love, in this specific situation, the skew on the equity, or sorry, the skew on the options. Like, I would almost rather risk like 0.5% or 1% of my account and put it into the puts, because they're so asymmetric. Because like, at the end of the day, keep in mind with this play, like, even back here or anywhere, I'm not trying to make 10, 20 points. My base case assumption is that this thing really unwinds. And so even on this 865 break, like, my base case assumption is this goes to 800 or potentially even 750 or something. And so again, like, the puts just offered so much asymmetry. And I think the other benefit of puts is they also provide you a lower probability of churning yourself. Like, like, to Chris's point, it's so easy for you to just short the 865 and cover 870 and lose 5 points. You know, like, just given the spread and like any potential choppiness, I'd rather risk the premium once and just have you just almost have insurance, where it's like, rather than stress myself out on like, oh my God, in and out and churning, and did I get stopped out, everything, like, in this very specific situation, I think I would just way rather be in the puts.
Got it. Thank you.
Yeah, like it's the way you think about it is like the premium was just so small relative to this the spread and everything else. Like a couple points is just nothing on these. And even I would argue even if the puts at that point are $5 or $7, I can't even guarantee I'm going to get stocked by 860 on that break. Oh, that's the other benefit too, by the way, guys, is obviously there's no short sale restriction mode in the puts either. So if that breaks 865 and I can't get stock, I know I can just pay the spread in a put. So that's the other benefit of the options market to keep in mind.
That's
And
great.
then, so inside of that consolidation, it looks like,
Hey Neil, what's up, brother?
hey, what's up? It looks like that 880 level held pretty clean 3 or 4 times. What do you think about taking a position around there?
So this is what I would technically call no man's land, just because we're still in this range, and because we're so close to 865, like 95 out of 100 times, I'd rather just wait till 865. The only thing that makes this a little bit different is because of, again, short sale restriction being a little bit of a pain in the ass. But overall, I just don't want to get churned around in here. Yeah, that's like a decent level, but we're just so close to those lows. I would rather just be certain that we break the range, rather than short ahead. Like I wouldn't be totally shocked if there were a lot of people that shorted right there. Then you end up losing like 30 points. I really just tend to want to wait for the true breaks. I think a lot of people, and this was kind of the whole video I did on No Man's Land, I think a lot of people end up giving back a lot of their gains or churning. Or what also happens, right, is it's such a common behavioral thing where you'll short here, cover, short here, cover, short here, cover. Then when it actually goes to 865 and it's the true level, like then you don't take the trade because you already lost like 2 or 3 times and you took paper cuts. So I really try to just focus on the true ranges. Like, I mean, if you're going to short a little bit, like there's dumber things. Like, I don't think it's awful. But in general, I'd rather wait.
Got it. Thank you.
Yep. Anything else for now before I jump onto kind of the next day and even like the last couple days? And I also wanted to touch ARM at some point. And I don't know if anyone's time constrained. If you're time constrained, I'm not. But if you are, please let me know any questions and I'll jump you ahead. Otherwise, let me jump forward. So
I have a question about the options.
Yep.
And you shot the buy the 850 puts.
Mhm.
And do you risk the whole premium of it, or if it holds back above 880 or something, and you will cover your puts? Or
yeah, I mean, that's also a harder thing to say, is like, when do you give up on them? So that prior day on 2-15, because I felt they were so asymmetric, like I ended up holding my puts the whole day and they definitely decayed hard. Like they super decayed. Because keep in mind, like when you're playing that short dated and that short of an expiry, like if I was buying them for like $250 to $3, $350 or whatever, I think by the close they were like, I don't remember. Like I think they were even maybe sub $1 or something. So you can really burn through a huge ton of your capital waiting. But in these instances, like I really want to for me to get out of those puts, because I think they're so asymmetric, like I really want to be proven wrong. So like, let me see what I would have needed to get out. So let's see, if I would say initially, once we're in this range, if we got above 920, like if it's, call it, 1230 or something, and this curls up and goes above 920 and it's 1 p.m., at that point, I'm probably getting out, because like, there's only so many hours left. If this is going to start to curl up, there's just no time to get going. So I would say if I don't remember what time I shorted, it was like somewhere in here. If this went to 920, I probably would have covered and just saved what I could, which I'm sure it wouldn't have been that much. It would have sucked. Then once this breaks 865, yeah, I mean, I would say if we broke 865 and like went to 860, then broke 900, I'm probably getting out again. Just because again, if that goes down and back up there, you're just running so far out of time. It's a dangerous game, but in general, with those puts, because there was so much asymmetry, like I did want to be proven wrong. And again, that hurt me the prior day. That hurt me the prior day, but again, it's okay to be hurt. Like one of the biggest fallacies I see on Twitter, and this came up with the VVOS example, is like it's totally okay to take a loss. Like it's not about are you going to lose or are you going to lose really bad? It's how will that pan out over the long run? And so I took a really bad loss the prior day, but that's okay because it's so asymmetric, right? Where it's like I missed this move and was still able to make it all back just because of the asymmetry. When if I had held those, it would have been like a 20x, right? So I think like the bigger point is you just need to size properly. You need to size properly so that you don't mind if you get kind of taken out by some of the decay. But when the asymmetry is so good, I really want to be proven wrong. That makes sense, Alvin? Good?
Yep, thank you.
Yep. So let's jump to this daily real quick. And you want to know what's funny is this did actually end up stopping. You guys know how I talk. This is a great example, actually. Like a lot of times, and even at the beginning of this call, I was talking about how that moving average is kind of like my base case for the daily reversion. Like look how close we got to that moving average. That's so when I'm using that to ballpark the reward, that ended up being a super, super good way of ballparking it, right? Like, so now think about it at 1025-ish, if you're risking 65 points to highs and you're saying, oh my God, there's hundreds of dollars of meat on the bone, you're 100% correct. And so that's why I use the moving average as a measure on the big picture. So one thing I want to talk about is on 2-20, we're going to jump to, and then we'll talk about these last couple days. Then if there's time, I'll talk about ARM. Because ARM I actually thought had some really great plays. And ARM I actually think was in some ways a better ticker to play on some of these days. And I actually did really well in it, and that almost sucked me in even worse. But so things to keep in mind is SMCI the prior day, the day we were just obsessing over, it closed bottom tick. That is a really, really bad sign. We closed total bottom tick. Going into the open, we were gapping up around 830, but then come the open, we're pretty much opening below 800. That is bad. And if this stock goes from 1100 to 800, it bounced. It had at best like a 40 point bounce. This thing wasn't able to bounce at all. Then the next day we open up below 800. That is really bad. And I mean bad in the sense like that's not bullish at all. So what happened here was we then go from 800 to 730. So now keep in mind on the daily chart, that moving average is around 650-ish. So for me to really get aggressive, I would really want this to capitulate down to 650. When this stock did this, I did start to buy into this move a little bit. And because I was flat, by the way, I was totally flat into this day. So that's the other thing I should add is after the prior day, when that collapses to 800, I don't have any really strong view. Like most of the easy money, I think is gone at that point. And I would not be shocked if this gapped up to 850 and then potentially drove to 900. Like that bar is so rangy that you really need to stay open-minded. There's a lot of times in my career where I've said, oh my God, this stock is dead. It's going to just keep going down, 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 down. And then it gaps up and like sucks people. It can be really hard if you don't stay open-minded. So I had no major view and I was flat going into this day. We're weak off the open. We do kind of a little sell-off. I bought a little bit into this. The one thing I want to talk about is this is an example where if I'm buying in here, this didn't go so far bounce-wise, where when this broke prior bar lows, this is an example where it's like, okay, The lows are kind of like about 10 points away. So I wasn't so convinced you need to stop out of here. I sold some, but then I held a little bit and was able to catch the pop to the moving average. So one thing, once I do, those may or may not know this, but I'm trying to create the greatest trading course of all time. It's kind of top secret. But one of the topics I want to discuss is really the geometry of charts. And I think I've not really seen it discussed that much out there, but like to me, every single chart is like trading is essentially geometry in some way. So when we're here, again, I'm saying the moving average is a base case for where we could bounce. At this moment in time, the moving average is at 770, and we break down here. And at this point, we're probably about like 15 points from lows and probably about 25 points from there. So like, because we're so close to the bottom of this range, like this didn't trend enough where I think you 100% need to get out. So I ended up selling some, but also keeping in mind that like, look, this was a kind of a big, sharp, fast move. If this does bounce, like it could kind of just have more reward. Not that that was some big trade for me, but I'm just trying to use that just as an example of kind of how I think about this stuff. And so then we sell off and we go to lows. And for those that were watching the box, oh, so actually I almost forgot. What did we see? Who wants to be the person that knows what we saw on here?
The NASDAQ offers.
Mr. NASDAQ offer.
Yeah.
Yeah. And so people talk about how reading the tape and the level 2 box has no value. Again, for certain people trading certain strategies, I 100% believe it has no value for them. But just because it is no value for them does not mean it is no value for me, right? And so like, think about this. There's probably what, 5+ different venues out there: NASDAQ, EDGX, EDJ, BATS, BATTY, ARCA. Like, there's no way to know whether this seller is the same person that was buying on NASDAQ those other days. There's no way to know unless like we were like the SEC FINRA or whatever, and we're somehow studying the internal volume. You're never going to be able to confirm everything. But to me, it's like a little too coincidental that that dude actually, as people point out on Twitter, could be female, but you know, could be an algo, could be just a robot. We don't know. But the cyborg selling on NASDAQ, it's too coincidental that it's the same venue, right? And very similar sizes. You know, we're talking tens of thousands of shares. We've been watching this stock for weeks. How many people are selling 10,000 plus shares visible? Not that, like, none, right? So like that, once I saw that seller in there, then I started to think, oh my God, this might not be able to bounce that well. And this guy was definitely getting taken because of what a move it was. But a lot of that buying was being absorbed by that seller. Even as we were bouncing through here, like, you know, he was at 750. Then I think he was at like he was all over. But think about that. When you're selling these, you know, 3, 5, 7, 10, these thousands and thousands of shares, that's absorbing so much buying pressure. And so what ends up happening is we end up rolling over and that seller's still there, and we go down to 700 and that seller is just still there all through here. Like, you know, I don't remember the prices, but like 706, 708, 70 whatever. And even as we're trying to bounce here, that seller is still there. And so that is how, like, you really need to temper expectations until that seller is gone, right? Now, think about it. People are like, oh, how does that matter? Well, guess what? As long as that seller is there, this isn't going to have some magical, crazy bounce. This dude is just absorbing thousands, like tens, probably even hundreds of thousands of shares of buying. Like, that is a crazy amount of selling to absorb all that buying. So that's not going to bounce that well. Then the other thing is, if that person's finally done, then you could see people finally gain the courage, because who the hell wants to keep on buying and fighting the seller? So that's an important thing to keep in mind. So this slope wasn't that great. I would say this is a slope of -1. We're not below the Bollinger Band. We're not super close to the moving average on the daily. So what I would have really loved, right, is this is first leg, this is the bounce, this is kind of the second leg, you know, this is kind of the bounce. I would have loved it if this rolled over and went to like 650 super fast, 650 or lower, even 600 or whatever. that would have been really appealing. Once we start just trading all bullshit like this and that seller's still in there, like, yes, we did end up catching this. This did end up bouncing super good, but that's fine. Like you don't need to be in every play. And once that seller is just not letting up and we're just kind of like, once this happens, that for me, the play's over. I don't need to be involved at this point. Like I have no confidence. Oops. I have no confidence this is going to bounce well. So this for me, this day was like mostly a hands-off day. I did a little buy, huge NASDAQ seller scares the shit out of me. NASDAQ seller controls it the whole way down. And like, yeah, and then just the slope isn't that great. There's no real volume capitulation. There's no price capitulation. It's okay that this bounced. Like, people get so upset. Oh my God, like I can't believe it bounced. Like, that's fine. It didn't set up that great. It wasn't that capitulatory. The seller was being a pain in the ass. You can't control those variables. Yeah. So any questions on that? Going once, going twice. Okay, now we're going to jump to the fun stuff. This is bonus content because before I tweeted this, I didn't know the last 2 days were going to happen. So we then got NVIDIA earnings. NVIDIA, as we all know, went up, and this SMCI exploded. So a couple things that were interesting to me, just keep this daily picture in mind. So the other thing, by the way, that I want people to really recognize is like, look, like this is a super crazy weekly chart, right? We went from like 350. Look how crazy that range is. This volume capitulation is enormous. It's the most volume this thing has ever done by like, just look at the last month or two. Again, NVIDIA first had its blowout earnings way back here. Like SMCI became an AI name all the way back in here. So where the fuck is this crazy volume? Like, so if you were to, like, my personal belief is that this will be a very big picture top. Like my belief is that this 1070 high will hold for a very, very, very long time. And I still suspect that the equilibrium price in this is way, 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 way lower. That doesn't mean I'm going to like be a nut job and like, shorting crazy forever. But I am hugely biased because this is one of the biggest volume and price capitulations we have seen in years. Find me like a huge multi-billion-dollar stock that's gone up 200% and then capitulated like this. Like you can't find me another chart like this. I've looked through my database. There's not too many like this. You've got GME, you've got some of the Tesla stuff, but like I don't even think any of that stuff compares to just how crazy this was. So yes, I am very short biased because keep in mind, like this went up 1 week, 2, 3, 4, 5, 6. This was the first break on the weekly chart. Like it's very feasible that the average price could be more around 600 and less. Like, again, if you were to ask me, all the price action above 800 or even 900, that's all gamma squeeze to me. Like this is almost all kind of just bullshit market structure got broken. So I very strongly suspect that we're going to trade. I don't think we're going to 400 or 500. I don't even know if we're going to 600, but probably down here seems more appropriate to me than up here. But anywho, let's see. So now we're going to go into these couple days. It's what, the 22nd and the 23rd. Oopsies. Okay. Okay. So a couple things that were interesting is NVIDIA was exploding after hours. SMCI was kind of chilling around 800, 810. So even pre-market, SMCI is at 820. Not that scary, at the end of the day. And then we shoot off the open. So this you kind of like, so now big picture, like you do want to be careful with this because this did, this was up at 1,000 plus. Like you don't want to be like, oh my God, 10-point move. That's the biggest thing ever. You do want to be careful. And so we do kind of shoot off the open. We're kind of rangy and all that. And so once we kind of go to highs here and we're just holding, this is where you need to kind of be careful that like, oh my God, we could just be in for another up day. The slope here is just kind of just +1. We do start to roll over, but then we immediately reclaim. And you want to know what this reminds me of? This reminds me of the week prior, towards the close, where we just can't go down. And so I would argue like it's a totally feasible breakout to buy this $900 break. Right? Because this makes a big move. We can't go down. We start to get really tight. We break 900. And so here's what's interesting to me. NVIDIA at the time, let's see if I can pull that up real quick. So SMCI was trading very closely with NVIDIA. Like if you were to overlap these, that like, just look how similar this chart is, right? But then NVIDIA kind of stays flat all day and we don't break out until 3 p.m. So keep in mind, we do this, NVIDIA stays flat. Now this is going to be important. SMCI does the same thing, but whereas NVIDIA stayed flat until 3 p.m., SMCI breaks 900 and then goes $90, right? While NVIDIA stays totally flat. And so if we want to talk, like, I would argue we end up right back in the same gamma squeeze type deal where it's like, right, if this is moving up with NVIDIA's earnings and trading with NVIDIA the whole morning, like we break 900 and all of a sudden, like all bets are off. The stock just totally disjoints from the NVIDIA price action and it goes another 90 points. Now, keep in mind, like this stock pre-market was only up at 820, right? Like it really wasn't that big of a gap. And like all this was fairly normal. And then it just goes off to the races. The only place you really want to potentially short this where it starts to get capitulatory, I would argue is in here. This was the biggest volume bar, and it was the biggest volume bar minus the open, and it's just starting to get above that upper Bollinger. But all of this is just really scary, right? So if we want to look at some of my basic rules, we're spending the time above one. We never break the opening range. We're holding mostly above the moving average. I don't have VWAP on this chart, but I assure you this whole time we're above VWAP. And we're never capitulating. We're never getting that super extended. Here's the only point where we get overextended a little bit. And sure enough, we just end up consolidating. And then into the close, we kind of go and we're back up at 1,000. So that's definitely like, you say, holy shit, like, oh my God, could this really end up going a zillion more points? Now, the thing to keep in mind though, is that big picture that I showed you guys, this already had the biggest capitulation ever. There is no way we're going to end up doing that volume again. And yes, it's a little bit scary, but I would argue that this is still technically backside. And what we just did right here on the daily chart is very, very high potential for a lower high. So let me just jump back to the daily for a second. And this is a concept I've also, I know on like some of the Patreon, like for some of the Patreon people, they've seen me talk about like this lower high many times. And so if let's see, I might just waste our time, but so even in stuff like the shot stopper, this is the safety shot, this stock capitulated. We had the big break and then we go and curl up here. And a lot of times we talk about how after this major capitulation, so many times you end up with an amazing short with the lower high and vice versa also on longs. I mean, I really love this GOF chart, which is actually just a closed-end fund. This does this huge capitulation, mega volume, and then we kind of try to roll over again. So often, in this case, this is a higher low, obviously, but so often that rollover after this structure where you get mega blowout capitulation. I mean, even if you were to go back to GME, AMC, some of those names, you end up with this dynamic. I'm trying to think of some other ones this year that had capitulations, but this is a very interesting thing. And so with SMCI, right, we have this huge blow off. And like, especially if we go really big, like if I zoom out, this isn't so different in concept from the shot, right? Shot big blowout, huge pull down, then we shoot up there, then it's back down, and that's the big picture. Oops, fuck. But the same way that this ended up being the big picture lower high, and we never get anywhere near those highs again. Again, I'm not going to bet my life on it. I'm not like yes, I'm still short SMCI. And I think we're going to end up meaningfully lower. Again, I can be proven wrong literally tomorrow. It's possible I literally get stopped out tomorrow, but just based on the odds, after a capitulation, I will bet on this being a lower high, especially after the super insane capitulations. Like, this volume is ridiculous. I will take that bet every time. So then if we take SMCI, I would argue this is the same exact situation, and we would never, like, the NVIDIA earnings are almost like a gift where you re-get up to those levels where it's just like, what the hell? Like, we know, we get it. Like, again, SMCI has already had their guidance and their earnings. We know their growth is increasing. Like, we get it, people. We get that they do the servers. Like, we get that it's an AI play now. So just because SMCI or NVIDIA had their earnings that everyone knew was going to be good anyways, we're really going to go up like 25%. You know, like, if you were to go back at the last couple earnings, SMCI has never moved like this on the NVIDIA earnings. Like, but now everyone's just like super going nuts. And so, not that I want to fight that trend that day. I mean, I was short a couple thousand just because I was flying back and wanted some exposure, but the odds that this ends up that big picture lower high, I think is so likely. So now let's go back to this chart. And again, you know, nobody do anything dumb. Like, I could be literally proven wrong tomorrow. That doesn't mean, you know, you can't be wrong. Anyone can always be wrong. So what was really interesting, did I just mess that up? What just happened? I'm on it the other day. Hold on. Well, how did I mess that up? There we go. So one other thing is, so we close super strong and NVIDIA breaks out at the close. Now, what's really interesting to me is this ends up failing after hours while NVIDIA is going up. And so then overnight, the next day, this SMCI is actually down a ton while NVIDIA is actually gapping up a bunch. So before, when they were correlated, that correlation is finally broken, right? Because the same way that I would argue that, you know, the last 1,000 points, 900 to 1,000, were just total bullshit gamma squeeze because NVIDIA wasn't really moving. Now that relationship is broken, right? If NVIDIA is up, this should be gapping up, but it's not. And so we open, you know, about 50 points lower, and we really rip towards that $1,000 level. And if you believe my belief that that's going to be that lower high, shorting against that $1,000 level is really interesting. Not that I want to fight that trend, but this is where we make a nice move. And so I ended up shorting the shit out of this turn. Why? Because you can risk 24 points, right? From 975 or whatever to 1,000. You can risk 25 points on the belief that this is going to be the big picture high. And like, that doesn't mean I need to trade a big picture. I don't need to hold that for weeks. I can still scalp this, right? So one of the questions someone asked is, would I potentially short this low here, the 925-ish? Because of this range, we've already gone almost 75 points. I view that as a little bit of a chase. Like, I don't think the expected value is just so encouraging. It's just a little bit too far. And so now, some of you might be asking, Lance, why are you shorting this turn, but you weren't open to shorting the turn on the top day in SMCI? That's because this is so much sharper and more severe. On the top day in SMCI, it was much more rounded of a pattern. So because we're kind of, you know, it's that huge sharp move, I want to short that turn only because it's so sharp. If this was kind of rounding, I don't necessarily want to short that. Then I would give it to these lows. So if this did like a little rounding hump pattern, I don't mind shorting 925 then, and that would be very similar to the top day. But because it was so sharp, and because we're so tight into those prior day highs of 1,000, that's what allows the structure. Again, it's geometry. I can risk the $25 to here, and my asymmetry, my skew is huge, very, very symmetrical, right? If I believe the last 1,000 points were, or sorry, not the last 1,000, if I believe the last 100 points were kind of just a gamma squeeze and could unwind like we did the prior week, I'm risking $25 to potentially make 3 to 1 if I make the, you know, other 75 or whatever. But that's also why, like, you know, like shorting 925, I'm not so confident either that this totally retraces the prior day's range. It's just a little bit too much. But what does end up happening, so even this, I don't love shorting this low because it's just not enough consolidation. As a general rule of thumb, I wanted to see it consolidate to the moving average. This is just not enough. But what does happen is kind of this pattern here where we make the lows at 860, we do our little bounce. So we kind of get like a little pop here. This is the only negative of this play overall, but what ends up shorting is very similar to that same bouncy ball play where we break 860 here. So this, I mean, I was definitely into this short. Not as good as the prior week. Again, I don't love this strength here. Like that's kind of a con. I wish this was all lower. But this is enough consolidation of a couple hours where I definitely do want to short this 860, especially because we were so tight in here. So what's interesting here is we start to find resistance at 880, then we roll over, and this 860 I think is really nice. Yeah, I don't think it's gonna mega melt. Like I don't think you're gonna make 100 points or something, but I think it's pretty high probability that you're able to make that kind of leg there. Neil, you got something for me?
No, I didn't have anything. No.
Cool. So then as far as like the rest of the day, there's really not that much I would point out. Like I'm not going to be doing any long in here. Again, I just think it's a big picture short at this point. So I'm not kind of touching it in here. But the points I would kind of want to make is, you know, I think this 860 minus this little bump there is kind of an interesting chart to study. And I think this concept of why I shorted there rather than there and just structuring it against those highs. So this position I do still have on. I'm kind of, so there's another thing too. So I am short stock, but I'm also short vol, where I do suspect that volatility does contract at this point. And like the thing is again, like I'm kind of the belief that this is backside. I do think the odds are way favorable that this stays the big picture high, that volatility finally starts to contract some. And my base case guess is that this starts to kind of trickle down at least, I don't know, closer to 800, probably closer to 700. But again, so here's the thing is like, I can have a view, but like, if we break 1,000 tomorrow, that view is totally invalidated, right? Like if you know, I take it every bar, like I always argue that expected value is dynamic. Every single bar that elapses, that's information and data, and it changes the assumptions. You know, if tomorrow this goes and breaks below 700 tomorrow, then the odds of this going to 550 is way higher than otherwise. So it's, you know, the point is you just really kind of have these views, but you're updating them constantly. But yes, I do think this was the greatest capitulation, not of all time, but it's definitely up there. And I do think it's very possible this is kind of that lower high. And I do think I don't have a strong view on where we end up, but it's likely to be lower than 1,000 and closer to the middle of the range in my view. But again, I can change it tomorrow. What questions from everyone? Oh, and for what it's worth, I was looking at the options. So the options weren't particularly cheap those days. Nor I didn't have a super strong view either that this would go as far as it did. Like I felt like we could collapse closer to 900. I didn't feel like we'd go so far. So the options were not so super appealing to me, and I only did equity yesterday or Friday, whatever it is.
So Lance, this is not like a nuance that you just pointed out, but I think part of the reason I didn't want to short at SMCI Friday was because NVIDIA at that time was just like cruising the highs. It was at like 810 or something. But I did definitely notice that there was like that divergence between NVIDIA moving and SMCI, even like the previous day a little bit. So I think that if SMCI kind of was still trading with NVIDIA, that probably changes like a bunch of like the Your thoughts like on the move?
Yeah, that would definitely change it a little bit. And it also did seem that like, okay, this SMCI is being super weak to NVIDIA. If this NVIDIA does turn, which it ended up doing, I did feel like it would. I felt almost like if NVIDIA goes up, SMCI is not really going to trade with it anymore. But if NVIDIA goes down, SMCI is probably going further down. Only because, you know, in my view, like this SMCI just had so much extra meat because again, like think about it. When Nvidia had their initial earnings, like, you know, this SMCI went up with the other semis, but like think about it. This stock closed at 720. Why was this stock up 35-40% on Nvidia's earnings? Like they already had their own earnings 2 weeks ago. Like, what information are people really getting? Like, oh, and like it's the early innings for AI. Yeah, no shit, or else these wouldn't be like so much is priced in when you get a large cap stock going from 350 to 1,000, so many assumptions already need to be priced in. Like of course, or else this stock wouldn't have even been here to begin with. Yeah, so it's just like eventually you got to say, just like, come on, people, like we're getting a little crazy. You just can't always, yeah. The other thing that's weird too is like, again, Nvidia did a little gap the next day, but like SMCI went from 810 to 980. Like it's just not remotely in proportion to what even if you argue the high beta thing, like, well then okay, after hours it should have been up further. You know, like something's got to not make sense. Like something like and that's kind of my whole argument with this move to begin with is like if the earnings and the guidance were so good, like why aren't you buying it at 480? Why is it sitting here for 3 days? Like all the people that want to just say, oh my God, $1,500 price target, why are you not just YOLOing into this 500 points lower? It's just like no matter what, if you're buying up here, you're wrong because you could have bought 50% lower with the same information. That's why it's just a massive price feedback loop in my mind. So let's see. So I got one question. Assuming you had bought the 850 puts on day of capitulation, are you piecing out of them as it starts to level off? Then essentially, are you piecing out of them or holding them throughout the day? I think especially when you're in the short dated calls, the short dated puts, you do need to piece out of them just because the skew as it starts to work is changing. Whereas when I bought them, it's like, oh my God, these could go up a ton at 840 or 850 or 830. That skews way different. And you're dealing with some level of randomness, actually a larger level of randomness when those expire that day. So it does get very scary when the expiry is only a couple hours off. Like if that ends up bouncing sharply, I don't want to end up taking a 0 rather than taking like a 3, 4, 5x. So I definitely was scaling out of them. And in fact, even probably by like 820, I was very quickly flat. I think if you're doing it as a YOLO position and you have small exposure to it, like, okay, sure, maybe you just kind of have the balls to hold, but I don't think it's reasonable to kind of just do that for size. Let me know if that didn't answer that and I'll change that. The other thing I want to make the point at is like, oftentimes when things are psychologically most difficult is when it's most rewarding. Like everybody I know got their ass kicked on the way up on this. So it is very psychologically hard to keep on betting. But like that one dude on the trip said, like as long as this is getting more capitulatory, and so there's times when it gets less capitulatory, right? Like if we were to look at this was a good bar. This bar is bad. This is even worse. This is even worse. So opportunities can look great, then get worse. This looked good, got even better, then got truly amazing. And so it's not that everything just simply gets better the further you go, because this slope is getting way worse. You know, this is way less capitulatory, but here we're getting more capitulatory. As long as that happens, it's very psychologically difficult to keep betting, but it really is the proper thing. And the key then is just sizing. You don't want to lose so much on day one. In fact, I would argue you want to lose $0 on day one of this breakout. You want to probably lose a little bit. I lost too much on this day. But then as far as exponential bet sizing, if I bet 0, then I bet $5, I might want to bet $20 on this day. But the key is not to bet. If I've got $25 of risk and I do 0, 5, 20, that's perfect. What I don't want to do that most people do is they do 10, then they do 15 and they do 0. Like that is the exact opposite of what you want to do. In fact, a lot of people will do 15 and bet way too much too early. Then they do less and they do 10, then they do 0. Like you're betting the most with the least expected value. I want to bet the most with the most expected value and 0 when the expected value is not that good. So I think that's important. The other thing too that I think is important, like given my theory that a lot of this was the options market driving this move, I don't think it's so coincidental that a lot of this kind of happened on option expiry either. Like, yes, that set up the amazingness with the puts, but I would argue like a lot of exposure and deltas were going to be expiring with that. The other thing that I think is important from my notes, it's really important to
Lance, something to mention. It wasn't just the weekly options that was expiring; it was also the monthly option that was expiring.
Yes. Yep. Very, very good point. Yep. Then what else? Oh, so the other thing too is like it's so important. Like you shouldn't really be frustrated fighting a stock. You know, this day was frustrated fighting. The best trades have the see it moment where if you're an experienced trader, you really can just kind of trust yourself where it's like, okay, if this is going to do something for my playbook, I'm going to be there to capture it. And that was something I could have done a better job at. You know, another question. Yep.
Lance, follow-up question on that. You mentioned that a lot of people were taking pain. How much do you use that as an indicator? Like if the day before is really painful, how much do you weigh that as the top is really close versus chart data and something like that?
Yeah, I'm definitely weighing that. It's minor, but it's something I'm aware of, right? Because again, like a lot of stuff is driven by human psychology. Like the market is still just all human participants. And like what's so funny is like the amount of Twitter polls saying, oh my God, first it was is this going to 1,000, which I thought that was super far-fetched. Like I remember seeing those polls and they're like, oh my God, come on, this isn't going to 1,000. And once it got to 1,000, like it's so easy to say, oh my God, $1,000 isn't that crazy. But it's like, whoa. 2 days ago, $1,000 seemed ludicrous to me. Like you can't let that leave your opinion. And then at $1,000, people were doing the polls. Is this going to 2,000? And it's like, oh my God, guys, like that's always a sign. And like when everyone starts to lose total realm, where it's like this whole move wasn't even 1,000 points. You really think like it's now going another 1,000? Like that is, I don't want to use that as a major indicator, but the fact that price has become broken, right? Like the range on the initial guidance was $100. When we can then go like, I don't know. I mean, we went from 875 to 1,000 when on a random day, weeks later, we're going more points than on the initial guidance. On the earnings day, we had a $50 range. When we're going 2x the earnings range, like that's a really, really good sign that things have gotten totally crazy. And so I'd say that's just added to my mental checkbox. And especially when people start to say, oh my God, like I give up. Like it's generally a sign that, okay, we're getting near. And most people do the opposite. That's what markets do. Markets suck you in to do, like the most psychological mistakes possible. If you take an untrained person, they will buy things at the exact top. They will hit out at the exact low. And part of trading is training yourself to do the opposite and think the opposite. And so, yeah, that's definitely a sign where when everyone's like, oh my God, this is never going down. Oh my God, it's too hard. That's a sign where it's like, okay, like we're reaching the point of max frustration where it just, it's not that the stock can't be $1,000 stock. Like it totally could be, but it's just, have we gone too far too quick in the very short term? I have no view on where this is 2 months. I mean, I have a little view, but I don't hold strongly to it at all. Like I don't care if in 4 months is at $1,000. All I care is that on 2-16, on that specific day, the probability to me that that stock ended up cracking was probably 80% plus, 90% plus. And yeah, everyone giving up is, that's a sign you're near. Because again, it's not that it's if everyone gives up and the stock is flattening out, I'm giving up too. If we're going sideways, I'm out. But it's not that we're flattening out, we're going even more euphoric. The volume, the price, it's all going more euphoric. As long as the capitulation indicators are accelerating, that is making the play better. If the play, like if this day we sat between 950 and 1,000, that's another reset. I'm not interested anymore. But again, we didn't. We got more euphoric. So definitely I'm weighing all that in. But again, I always need a chart set up. I'm not going to let other people give up or other people's biases force me into a bad trade, which is a little bit what happened actually on that prior day. But yeah.
Can I just ask a quick question?
Yep, hit me.
Did you feel like CPI and PPI had a factor on that, or on the way it brought down SPY and Q, or not so much?
I mean, so that's the part where it's like, in theory, people were I remember during, like, everybody was thinking, oh my God, is the market just going to bring this down? Is it going to bring it up? Like, this is doing something so, oh God, what's the word? Idiosyncratic, that sort. This is moving so idiosyncratic from the market where it's like, yeah, of course it's going to move somewhat with risk assets, but I don't want to let that overly drive me because this is just doing its own thing. Like the Q chart doesn't look like this. And whatever the Q chart does look like this is just because of NVIDIA, not really this stock. So I really just wanted to trade this on its own for its own chart pattern. The odds of this like cracking because of CPI or something, not that it's not impossible, but I guess my point is no matter what, I just want to trade this chart. I don't want to get sucked in by the market or NVIDIA or anything else. I'm playing a very, very idiosyncratic bet specific to SMCI. What else for me? Because then otherwise I'll dip into ARM if people are interested in ARM. The other thing, guys, by the way, thank you all very much for the donations. I do care very strongly about the charity stuff. For those that didn't see, I did match it online. Some of the guys on this call are a part of the Patreon. They have seen that all the money that they subscribe to does go to good places. We're actually building a school in Bali that's going to provide schooling for about 40 to 50 kids that otherwise would not be able to attend school. They were able to see their happy little faces. So I really believe in this stuff. And, so thank you guys. And definitely want to make sure you guys get the value out of this. So yeah, any questions before I jump to ARM or anything that I can clarify or dive deeper into?
Did the CEO being on Bloomberg TV at 11 a.m. factor into your analysis at all, or were you not paying attention to that at all?
No, not really. I mean, you do need to be somewhat cognizant. God forbid the guy's like, oh, by the way, Bloomberg, just want to let you know, even our since earnings, our financials are outdated. We're actually growing at 100%. You don't want to be totally ignorant that he could say something absurd. But no, you want to be aware of it, but it wasn't factoring into much of my decision. No.
So with how quickly SMCI doubled and tripled, obviously we hit all-time high volume on Thursday and Friday, but even if it was like just kind of shy of that 20 million mark, maybe like 15 million, just given like that it's like 3 times the price that it was at the breakout, how would you kind of view that volume? Would you still think it's like a volume capitulation, or how would you view that?
Yeah, so that's the other thing is I do think to some degree you need to price weight the volume. Like buying this, if something's $1,000 versus $350, in theory you can only buy a third as much, right? So I do factor that in a lot, and I'm aware of it. And I would argue that's why this volume probably wasn't even crazier. So a lot of times I do think that is something you need to be cognizant of. Like you'll especially see that in some of the low float stuff where it's like a stock went from $1 to $12. And it's like, yeah, this thing probably isn't going to do the same volume as when it was a 50-cent stock. I mean, what's a good example? Like I'm sure, I don't know, like I'm sure Bed Bath made some crazy moves like that. But so that is something I'm aware of. Yes, in short, yes, I am aware of that. And what's crazy is nevertheless, even at a 3x price, this still just did so much more volume. And again, like find me any large cap stock where this is normally doing like 40% of its float. I mean, I would need to go on Bloomberg real quick. I'm pretty sure this, I mean, someone correct me if I'm wrong, but I think it's a 38 million shares, I think. So for this to be doing like 50% of its float, it's just like, that's not normal for a large cap stock to do weeks after its earnings. So it's very,
I think it's 47 million.
47. Okay, cool. Thanks. And so it's, the point being is even doing 20 million shares, that's still 40% of its float. Again, weeks after the earnings, month after the guidance. So that's not normal. You will not find that stuff out there if you look for this stuff. And the volume is always a really big tell. Yeah, that's definitely what I was going to be looking for sure. Anything else before I jump to ARM for a little bit? And don't worry, that'll be way shorter. I'm sure some of you guys are wiped. And I'll probably lose my voicing, but let me just jump to ARM. Couple things. So this had the big level at $80. Not that I fully endorse this because it's a little bit crazy, but I think when these semiconductors have their earnings, I don't think it's like the craziest idea to have like a stop order in at $80. And people might, I know this happened after hours, but it's like people might say, oh my God, what if it breaks 80 and goes down? Like, yeah, you're going to take a loss. And this is the point I'd make where it's like, yeah, it's you can't worry about, are you going to take a loss? You just need to size it appropriately. The question is the expected value positive? In which I would say like these semis have been showing so much momentum, which again, that could already be over. Maybe that trend's over now at this point, but like going into these earnings, this had a very similar daily chart set up to kind of like the SMCI, although this hasn't been around as long. And like the odds that this has blowout earnings, if you have a stop in above 80, like some of the asymmetry, this ended up going 30, 40 points just on earnings day. You're not going to lose 40 points if you buy at 80. So again, I don't disagree that it's going to have shitty liquidity and you could lose 5 points or maybe you even lose 10 points. But again, when we just talk about the asymmetry, that breaking that level is probably just going to be bonanza. So I didn't have any strong view. I honestly wasn't even caring that much on this day, the 2-8. But what I do want to talk about is this 2-12. This was essentially the first semiconductor we saw capitulate. And I don't think there were any amazing opportunities. But I do want to make a couple points with this thing. So first of all, I think like, looking into some of these breaks is totally worthwhile. Not that I think this setup is amazing, but we do start to make kind of the higher lows against the wedge. You want to be really careful shorting some of this stuff. Like I think if you short the break of prior bars here, you kind of break out for even, get out for even, no big deal. I don't love the short anywhere in here. Maybe you argue like, okay, we have the lower highs and we break there. There's nothing short wise I would have really considered. But the point I want to make is this was such a ridiculous capitulatory move. The volume capitulation on this was amazing. And again, this did the same range and way more volume than it actually did on its earnings day. Yeah, I'm correct on that. So again, this is the earnings. We have a little nothing bar. Why the hell are we going up $50 like 2 days later on way more volume? Like that's, again, this stuff is not normal. Like I know it kind of seems normal in this market, but that's not normal. And So given this volume and how much this pulled back intraday, one thing I did actually was I shorted this at the close, thinking I would structure this against highs. And not the other thing too is I don't want to be a fundamental analyst, but this actually is the most expensive semi by far. And the other thing is this is actually dangerous in a little bit just because of the low float. But what I would say is this has the lockup by SoftBank. I think it's like, let me see if I have it on my phone. I think like March 12th, I think is the lockup, where SoftBank has the other 90% of the shares. Who knows whether they're going to sell or not? I don't have any strong view. But once something capitulates, I definitely do have a short bias, right? So like this is the earnings day. I don't really fade stuff on earnings day. There's nothing that had no interest for me. Inside day, then again, we just do a way bigger range on way bigger volume, and this pulled in so much intraday than kind of did the lower high. So what I was going to do is I was just going to short essentially around the close and give it to those highs, and it pulled in a fair amount. And so even now, I kind of suspect that this stock could really fade off into the SoftBank lockup. So again, you know, like if you were to ask me, like structuring this as a short against these highs, like I would argue if we weren't in semi-mania. So when this first IPO'd at $50, even that price was like, oh my God, it's overvalued, but it's low float, blah, 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 blah. Like this stock went from, it was at $75. If Nvidia and these other stocks weren't going so crazy, would this have ever done that in a vacuum? If Nvidia and SMCI weren't going nuts, would this have ever done it on earnings? I would argue 0% chance. The only reason why this was doing something so obscene is in sympathy with SMCI, and because it has a lower float before this lockup. So again, in the Lance theory of like things that mega capitulate, you know, aren't going to see those highs again, I do think it's somewhat feasible to, you know, just have a, you know, again, small short. You know, no one do it, you know, full disclaimers. No one listen to anything I say. I'm a moron. None of this is trading advice. If you lose money, that's on you. Don't do anything. But you know, it's pretty reasonable to me that this stock could end up far lower. And especially, again, I don't know if SoftBank will even sell. But I don't know. I think it's just probably a asymmetric bet. The other thing that's interesting too is the options are still so expensive for this thing. I think like into the lockup, you can sell like, I think you can still sell like the $150 calls for March for like $10, that's like a pretty huge premium. Again, when this, you know, already capitulated up there. Or I would argue you can even short the stock and then sell weekly puts for like a pretty large premium into that lockup. So I don't know, just kind of want to touch on that as far as like that one short is really the only thing I did in this, where I shorted the close because we had capitulated. And then just big picture, I have the view that post capitulation, these things tend to die. Yeah, I don't know. What else for me, gang, before I wrap it up? Did everyone, you know, at least have a good time? Was this informative? Was there anything I need to cover that people don't feel satisfied with? How can I make everyone happy? Yo.
It's part of the reason you didn't really want to short arm that day we're talking about is just because of the low float kind of like X factor. You know what I'm saying? Because like it was like there was like decent liquidity, but at the same time, like it was trading a little bit erratic, say the least.
Say it's just because of the low float. I mean, I think you need to. I mean, in general, you need to be scared of semis right now. Like, I don't want to fight the trend in anything. Like, so you always need to be smart. Like without a doubt, I would have shorted this turn. Without a doubt, I definitely would have shorted that. But I'm not going to be shorting against the trend, especially something that had this kind of setup that is breaking out like in this type of market. You will not get me to fight anything on the way up. I don't mind taking a stab on the turn. Here you would have broken even. So then even with this turn in here, like these are kind of consolidation bars. Then we just try to break out. So like at this point, the moving average is catching up. Like a lot of this is price acceptance. So I actually don't have an interest in shorting this turn. Like, let's see. I mean, this move went, this move went probably like 15 bucks. So like for me to want to short this, I would have probably wanted this to go to like at least 175. And so while this is like sitting around here, like I'm not that convinced in any of this. And a lot of these bars are kind of just price acceptance. So yeah, it's not that I'm opposed because of the float. Like I definitely see, and like even this is a little bit weird because we start to have these tiny bars in here. So I don't think this is some amazing home run, but I definitely would have gone for it. And even the volume capitulation, I mean, this volume capitulation doesn't exist. The volume's lower here. This volume capitulation isn't super great. So all these things would have been like kind of limiting factors in my desire to short. It's not that I wouldn't have, but I just don't love this as much.
Got it. Yeah, because like a lot of when I was preparing for like these moves intraday, I was like referencing like, so I just feel like we never got there, and that was like you know kind of like a would have been nice.
I mean, I would have been definitely obsessively watching it for sure. But no, it's this I'd say is more in the category of a trap where it gets close and it's seductive, but nowhere does the volume and price get so amazing. And then this is definitely volume's not great, price isn't great. Anything else from anyone or any random questions? You know, I'm open to all sorts of random crap. Non-SMCI.
Regarding this arm trade, you would get short on break of prior bars lows, right? And would your stop always go above prior bars highs, or even if it's like that tiny inside bar, if that popped by 2 cents, would you still get flat?
So let's see. So you're saying would I use prior bar highs on this turn essentially?
Yeah.
Yes, I would. So now where is that not necessarily true? I wish I could slide this bar up, but like let's say this green bar went to 160 and let's say this red bar went to like 158.50. That's an example where if it's so close like that, I might just give it like if the reward is like 20 points and like I'm just going to give it to 160. Almost like it's kind of the similar concept you asked about that breakdown using the prior bar highs rather than the level. Like if these was all shifted up, I'm going to cover 160 rather than 158.50 just because we're so close.
Okay, cool.
Yep. And so now the other thing too, I would say is like, let's say a stock breaks out. Yeah, this is almost a pretty good example. Like, let's say, you know, call it 127, 128-ish right here. Because we're not like, this is an example where I'm not going to sell right there just because, again, we're just so close to the breakout. Like, I'm really only using that once we're trending and gaining ground. If we break out here and I buy, I'm just giving it to the initial level, right? Like I'm not going to hit out there because we're just so close to 128 in the scheme of what this stock is doing.
Gotcha. Thanks.
Yep. It's really prior bar highs is really designed for when stuff is trending or counter trending. And again, it's just there's times when I might be thinking big picture. Like in SMCI, you're definitely compensated to be thinking big picture when that daily chart is so good. So I'd say it's a little bit more of an art than a science. Like there will be times when I use the moving average. There will be times when, yeah, there's just not some great perfect stop. Like when you asked with the SMCI breakdown, like, yeah, there I don't have some perfect stop for that. And I'm not really using prior bar highs because it's just not cleanly trending. Once something's, you know, when it's down bar, down bar, down bar, down bar, down bar, all following it, that's when I'll use it for the break. When it's trending and going up, 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 that's when I use it vice versa. Yeah. Anything from anyone else on any trading topic in the world or non-trading topic? I can say our group in Japan was definitely down a very large amount of money for quite some time.
Lance, I was just gonna ask, so when you get that turn and you just hold it to the level, would you say you only save that for like the plays that you're like really convinced in, or would you even do that for maybe like a B or a C setup?
Yeah, no, I mean, if it's a B or C, I'd say the logic remains the same. Trying to think of some chart that might be a really good example. Let me see. I mean, like that VVOS chart was kind of a good example in the sense that like it had this really big range. It consolidated super, super nice. Well, I guess that's an A, but like, no, I mean, I would say this breakout, for example, like I don't think this is some amazing setup. Like I would tell you that this is probably like a B minus to me. I don't even necessarily know if I would play it, but it's just the concept that like if this is the breakout level, call it 128, like I just don't want to hit out there because we're just so close to it. You know, this stock has a 10-point range. And so if like the asymmetry is in my favor. Like for most trades, like any breakout trade, and for a lot of stuff, the asymmetry is in your favor, right? This is a semiconductor stock that's doing a lot of volume. It's breaking out on the daily, big gap up. Like this could really go. It's got like the lower float. So when you have all that asymmetry, like I mean, because think about it. If I hit out, I save $1.50 versus $1.28, but this ends up going from there 20 points. And I know this is kind of a cherry picked example, but like that's kind of the belief though, is that when you're so close to that breakout level, the asymmetry of catching an actual move just like outweighs the cost of you risking that extra $1.50. Now let's say that this set up this same way at like $1.35. I would feel differently because then the breakout level is 7 points away. You know, at 7 points away, it's a way harder argument. That's kind of where like the art comes into more than the science. Like, let's say this did this $20 away. I would 100% be getting out. So like now keep in mind, what if this did this at $128.20. There's no way I would want to hit out at $128.20 rather than just give it the extra 20 cents to the breakout level. You get what I'm saying? That's where I use like polar extremes to use logic, where it's like if this is right by the breakout level, no way I don't want to hit out at 128.01. You know, like why would I ever do that? Vice versa. If this has got 100 points, I'm going to be so quick on that trigger.
Got it. Thank you.
Yep.
Are you wanting to wrap it up? I don't want to drag it out. If you've sort of put in your time there.
No. I'm hit me. If people want to leave, that's you know, thank you everyone for attending, but I'm here for you guys.
Okay. If I were to try to scan for a Lance style V trade, could I just sort of run by my thoughts and okay, if let's say 10 a.m. or 9:45, let's say I look at SPY and Q and it looks like it's going to be a trend day up. And then if I were to switch to the sectors and try to find the sector that looks like it's going up, and then maybe on FinViz, look at the thumbnails and see if I can find one of those sector stocks it's been going up, but for whatever reason, it's a little down.
Here's my first question. Are you generally doing intraday or daily?
Intraday.
Intraday. So
yeah,
for those,
so I guess I'm picturing kind of more like a scalp, sort of, you know, a shorter term trade, I guess.
Sure. So for one thing, and I'm just going to speak in general because you know there's a bunch of people here. Like, if someone out there is looking for the stuff on the daily chart, one program that's super affordable that I recommend. Well, it's not even. It's like a software. Or it's like a web application. There's this thing called stockfetcher.com, like stockfetcher.com. I think it's like $150 a year. And that allows you to very easily code different filters for daily chart patterns. It doesn't work for intraday data, but you can code all sorts of like waterfall daily patterns. You can code all sorts of consolidations. You can code breakouts. You can code, I want a stock that's at least 20% above the Bollinger Band. I want a stock that's 50% above the moving average or 50% below the moving average, yada, yada, yada. So for people that are interested in swing trading on a daily time frame or finding capitulations and those types of things, stockfetcher.com, great for the daily time frame. As far as the intraday, so one big requisite for most of my trading is I'm generally dealing with stocks that are in play. How would I define in play? Stocks that have big news catalysts, like breaking news, stocks that are making super absurd moves. So I would even say that stockfetcher.com is good for me having a watch list of stocks that are doing crazy moves. Like I can build a filter where ARM comes up because it's going super euphoric. And then what I'm doing is I'm looking at those intraday. Then you can also get intraday scanners that will help you find different price spikes. I think I might botch this because I don't use public software, but I think one is called Scans, or maybe it's called Big Scans. I think it's called Scans or something. Someone I can get you the name, but I'm pretty sure it's called Scans, and that allows you to program in different price spikes intraday. And so you can see what's the stock really shooting up, X amount percents. And I think also trade ideas, I think it's, or is it trading views or trade ideas? One of them also
trade
has
ideas.
Thank you, Trade Ideas. They also have these scanners like that so that you can see these intraday spikes. And so a good place to look is generally I'm keeping an eye on anything that's in play. I'm then also looking at sector moves. So like keep in mind the stocks that are generally making the biggest moves are going to be the ones that are moving the most. So if like this ARM, I definitely would have been looking at the next day. And like for the most part, if I'm going to be trading this, it needs to be like a decent, I want a lot of variables in my favor. Like I don't want to find the random, like I don't want to just type up and be like, oh, GE, let me see what GE did. Wow, this stock's, oh my God. Who knew that GE's been exploding? Holy shit.
As soon as you said that ticker, I just laughed in my head. I'm like, he doesn't know.
That's how out of touch I am with the world. So like you could argue shorting this and covering that, but this to me, it's just not in play and it's not a big enough move. So I wouldn't be applying this too broadly. Like I think most people don't find edge because they apply it to too general a situation. Like you might find this, but I'm like, no. I want the stocks that are really, really going. Like look at the volume pattern, how it kind of dies off there. And these bars are getting smaller. So what you can do is essentially program where it's like, oh, I want one bar, I want the second bar to be bigger, the third bar to be even bigger, and volume to be increasing. And so there's some ways you can use that for technology, but I'd argue even without the technology, I would start to list the variables that make these plays bigger. Okay, increasing volume, ideally 2x, increasing price bar size, ideally 2x. And then using some of these watch lists and what's in play, what's got earnings, what's been moving a ton, I'd almost rather find keep an eye on stocks that way and using these scanners rather than otherwise. Is that kind of in the right direction?
Yeah, that's awesome. Yeah, I mean, that'll give me a lot to work with, and I really appreciate it.
Yeah, and if I can dive deeper on that for anyone, definitely let me know. And then of course the next step after that is just back testing some of this and finding out what variables are better. And I think a lot of the things that make it better will be, what does the daily chart look like? You know, if this was a huge breakout, I don't want to short, let's say, 152 is a big breakout. I don't want to short right there. But ideally, like if we take SMCI, part of the appeal of SMCI is that daily wise, we're super extended. So on the daily chart, it's kind of a short, and then we're using the intraday for the timeframes to align. When this rolled over, it's a short on the intraday, it's a short on the daily. The best trades have both timeframes align, and it's goodbye. So yeah, ideally, you're also using a daily to help you frame the context of those plays too. What else for me? Anyone?
Yeah, I have a question.
Go ahead, man.
Does all the capitulation trade in mid or large cap offer a huge misprice in option, or was SMCI a huge opportunity that doesn't usually happen in other places?
I would say it's somewhere in between. I wouldn't necessarily say it's so much that it's a large cap. I would say a lot of it is just how it unfolded timing wise. Like, I think if this was a mid cap or a small cap, it's more so that this aligned where it was expiring on a Friday. And keep in mind, a lot of stocks don't, these have weeklies, but a lot of stocks don't have weekly options. So there's times where you really need it to align with being the third Friday of the month, which also makes it quite rare. But I would say, like, I've seen, like, there was a similar dynamic in this in GME. There was a similar dynamic like this in Tesla. I'm trying to think. There's definitely been, let me pull up my Evernote real quick on my phone. But there's been times where this does happen. I would say it's not so much the being, I mean, it's weird, right? Because you need to be a big enough ticker that you have options. Then the really big tickers have the weeklies. Otherwise, it's like kind of hard to align with the third Friday. I think that's the bigger factor, though, is just aligning timing wise. I mean, like we saw, I don't know if this had options in it back in the day. Oops. But this mark in the past made like back here, I'm sure this is split adjusted, but this made some crazy moves back there. But I don't know if this was big enough for options. Now we're nearly bankrupt. Actually, you want to know what also had a nice one? Was
I remember BBY was a really good option trade that happened on a Thursday or Friday as well.
Yep. Yeah, that's a great. Oh, I can't even pull that up anymore. Yeah, that's a great example. So it does happen. I mean, even you can get weird stuff like this was in 2020 on 315. Let me see if I can pull this up. This is 2020. Yeah, so this week, it's going to be hard for me to pull up, but this was on, let me see what day this was. This was on 24. No, I don't think this is it. Maybe it was back here. No, crap. It's going to be hard for me to find some of these without fooling around for a while. But no, these do happen. And like, I'd say this is even something that like, see you, Chris. I know you got to go. But no, it's more so it's just hard to align the timing, I would say, because like a lot of this stuff dealing with like a weekly option, there's just too much premium in there.
I see.
But it's definitely worth, like, what I would say is just throw this in an Evernote playbook, and like a lot of opportunities are rare and people forget about them, and that's what makes them so good. And people, the more time that passes, the more people lower their guard. And then like it's back in play. Like I'd argue even like if we get a hot IPO market this year as things are heating up, like people will have forgotten about, okay, this IPO closed super strong. We're bullish. We're above the pricing. A lot of those overnights can really work in the right sector. But a lot of people, you're like, oh my God, this is only in play once every 5 years. But then, you know, you get such a washout of traders that 5 years later it's in play again and people forget. So I just really keep a lot of just playbooks and Evernote on this stuff. And or even just look through your notes on past examples. And it's been out there. Like I know a lot of the SMB guys have been kind of chopping up the options market for a while on some of this stuff. It's I mean, if I had to take a guess, there's probably, I don't know, 0 to 2 a year that are really juicy.
Thank you.
Yep. Serge, I think you had a question.
Yeah. This is kind of the same vein of what you were talking about earlier. Could you pull up LUNR in the last couple of days? I don't know if you've been following this one, but
yep.
And I'm just wondering if I could get your take on maybe that day, 3 days ago, yeah, how you would have structured that trade. Looked like it was above the Bollinger, kind of similar setup.
Yep. Yeah, and so the way I look at even at this chart is like, okay, we made our little move from 3 to 7. That was roughly call about 4 points. We kind of pull in. Then this is kind of day one breakout. So this I don't consider a breakout bar, right? Because we're really the highs of about 7. So I'd say this is day 1, this is day 2, then this is kind of day 3. So I would definitely be keeping an eye on it. So then we're talking, what was it, 221? Am I right on that? 221. Okay, so we're chilling pre-market. I mean, keep in mind, most stuff doesn't tend to crack pre-market. Like sometimes you get better prints, but like I've definitely gotten myself more in trouble like fooling around and doing dumb shit pre-market than otherwise. So let's see. So right off the open, we kind of crack. So this to me, because of the daily chart, like this first initial crack is like it's a little bit less consolidation than I would have wanted. Like we spoke about on some of like on Friday's SMCI bar where we kind of dumped off the open and we get close to rolling. Like I really want a little bit more than this ideally. But nevertheless, like because this daily chart is so run up, I think I would have shorted some. And if you get stopped out above, back above 1150, no problem. But again, my general rule of thumb is I want us to consolidate to the moving average. So what I really would have liked is this to have done this without this little fake out. But now that we've consolidated better, the thing to keep in mind is because we've consolidated longer now, and this has made a lower high, this setup is better than that one. So many people will take this short, then end up missing that. And it's just like the analogy I gave with the SMCI to the upside. Too many people take that when it's not as good, get psychologically psyched out, then don't want to take another paper cut, then miss that. So I do think this is then worth another stab. And in fact, I actually think it's worth more risk because it's a better consolidation. We've just had more time. And, again, we can hold, maybe you get stopped out there. Like, given this has moved, like, I wouldn't be so shocked to necessarily kind of cover that turn. This does end up going limit down. I do think this is also just an interesting buy because this move went really far, really fast. It's not as if this is so crazy extended. So this is the type of thing where I wouldn't mind buying the turn on this either. And this is where you can kind of use that limit down area as a potential kind of level where when you break above 870, I think that's a totally reasonable. I don't want to buy on the way down, but once that turns through 870, I think that's a reasonable long to give to lows and hold, prior bar lows gets you out, there. Then I think we stayed in no man's land the rest of the day. Yeah. So then the whole rest of the day, I'm pretty much not going to trade it really. For me to want to trade it, I'd need it back below $8 and consolidating. Like we're consolidating in the middle, which is kind of like the base case, but it's neither weak nor strong during the middle of the day. That's just kind of the base equilibrium. I really want all of this consolidation to be shifted down to $8. So I want this shifted down to 8. Then if that breaks $8, I'm shorting. Anything in here in between, like essentially here we're at the bottom of the range, I'm shorting that break. That's good. Here, it's a reversal play at the bottom of the range for the counter trend. Anything then in between is just too no man's land for me. So I'm avoiding everything the rest of the day. In my mind, yeah, maybe you take that first one. You definitely want to take the second. Then maybe you play the long, and that's it.
All right, thanks. Appreciate that.
Yep. Does that all make sense with everything?
For the bounce trade, I saw that there's a hot in 975. Would you be holding most of your size over the hot, or you will wait for it to unhold and break the 2 minute bar?
So in general, I always want to be so there's always exceptions to the rule. As a general rule, definitely exceptions, but I want to be with the trend and I don't want to be taking the other side of a halt. If a stock is halting, it generally means price should be clearing lower in that moment in time, which of course can change, but in that moment in time, it should be That's why it's halting. The price should be clearing lower below the band. So I definitely tend to want to be holding stock into those. If I'm short, like that's super, like if I'm short into a halt, that's a super good sign. So I'm definitely not going to cover into that halt unless we're really, really extended or something. Given this daily chart, I'm probably holding my size into that. Yeah. So in general, I don't mind being with the trend into a halt. I do not want to be on the other side of that halt, though, generally.
Thank you. I got another question regarding the options. There's a breaking news headline from the information on Friday about the U.S. lawmakers demand 10 shipment ban over forced labor concerns. And the ticker is PDD, Pinduoduo. And I'm wondering if, because I saw the breaking news headline from OKTA that you mentioned previously on the 0DTE, would you be going straight to the options for the headline, or you may involve in the equity for the headline, or probably the headline is not effective
Yeah,
enough?
I mean, so this is a great example actually where so PDD Pinduoduo, it is another like very large stock with pretty heavy options. So especially this coming out on a Friday close to the close, like that's it. This is actually, and the other thing is this is in a ticker that is very or sorry, that news is being broken in a source that's very slow to disseminate. So I think this is a perfect example where you can really crush some major damage in the options. 100%. Yes. You'll be slower to the options, but I think like this is kind of a news source and stuff that generally disseminates slower anyways.
I see. So for the
I think that's a
options,
great example, Alvin.
For the options, the price will get into straight into 129 or 130 if it's when you see the headline is still trading around 132.
Yeah, no, I think that's reasonable. Like, yeah, it's going to be somewhat rare that I have some huge grasp over how far a headline will take it. So I would say like going probably like a little bit out of the money, but nothing crazy. Like I don't think I would buy like $100 puts, you know. But I think, yeah, going a little bit out of the money and doing like a 130, a 129, a 128, like I think that's totally reasonable.
I see.
Yeah, no, I think that's really good thinking.
I got another question regarding the earnings announcement for ARM and also Meta. Do you have any insights for like structuring the trades for the momentum, like the breakouts headline or the continuation trade during the announcement of the earning?
I mean, that stuff's hard. Like for a lot of, I wouldn't say I'm that great at trading earnings. Like trading earnings, I found to be a skill set in itself where you really need to know what the key metrics are for a stock. So this was something I wasn't that great at. And what I would say someone else was asking me about this recently. Oh God, who was it? Someone on Twitter asked me about this. You really need to know what metrics are the most important. Then you also really need to know what the whisper number is and what the market's expecting for that. So a lot of times, like some companies might have their expected number for whatever, but they might be super conservative or they might normally miss. Like, so there's like, it takes a lot of documenting and building up that skill set. And what you do is you just follow these companies for multiple quarters and it's just something you build up in Evernote. Okay, what were the key metrics? What does this thing trade on? And a lot of the times, if you listen to CNBC or if you read the news headlines or if you read kind of the analyst commentary, you find out what the metrics are that are actually important. But it's definitely a skill set that takes a lot to develop. I also don't love the liquidity after hours or during these headlines. Sometimes you can also get blindsided. So it's not really something I want to opine too much on, just because it wasn't a super strength of mine, and I'm not an expert, but that's how I would go about starting to think about it.
How about the like the Meta in the after hours? Meta announce earning and also announce the first time dividend that they are going to start from their earning, and I thought it is a really great news, and I'm at the time I'm thinking for a potential overnight for that, and I'm not sure if it's like longing the breakout at 446 on the earnings release will be like a feasible trade. It's a kind of some chase for that breakout.
Well, I mean, I think a lot of the time, so even with a lot of this new stuff, the nice part is you can trade these headlines and still have your technical setup. So when I would trade earnings, I'd still follow the same technical pattern. So you're essentially saying like getting long somewhere around here, right?
Yeah.
Yeah, I mean, I don't think there's anything wrong with that. But the important thing for me is I'm never going to let a news headline override the technicals. So even if I think it's going to gap up, I need to see it go, and I don't mind holding overnight. But if this stock breaks back below, or if this is going down, I'm definitely going to listen to the technicals more than I listen and trust myself. The other thing that makes these things hard as far as the overnight is inevitably a lot of analyst commentary ends up coming out, which in general, I would say tends to work in your favor towards the trend. Like if something blows out earnings, you can nearly guarantee that everybody is then going to be upgrading it. So in general, I would say there's a positive feedback loop that exists. But you just still need to factor that in. Like weird things can happen overnight. So in general, if I ever overnight something, especially with like earnings, my size is way smaller. So I don't mind buying that. I don't mind having the view that, oh my God, this could really continue. But I'm doing it for small size. And what I would say is like, just collect data. And it's not my specialty, but that doesn't mean that can't be your specialty. And, collecting data and just sizing up gradually over time is perfect. But you do want to be cautious with the other thing you need to be careful of is conference calls, right? Obviously, a lot of these tickers then have their conference calls later in the day. So you can have blowout earnings, but then on call, they say something way worse. So you need to be careful. And the other thing is not everyone guides in the initial release. A lot of companies can guide on the conference call. So there's so many times where you can get totally blindsided. My overall point is just, these are things to be careful of and take into consideration. There's actually a lot of money to be made sitting in and listening and paying attention to the conference calls. That's something I did a little bit, but then eventually, I've had better things to do than, waste all pre-market and after hours listening to calls and needing to just leave the desk at some point. But those are what I would be careful of and consider.
Okay, that's all of my questions. Thank you.
Cool. Anybody else out there that has anything to throw in?
Les, can you hear me?
Yes. What's up, Josh? How's it going?
Good. How are you?
Good, man.
I just have a quick question. Like, it's more about position sizing because I just new to the stock market, equity market after your famous Twitter about the futures thing. I was from the futures. So I just really want to know because I see a lot of SMB guys, they do like a fixed share size when they're getting in, especially for the initial entry. And for me, I'm more like I'm relying on line in the sand, and I just do more, I would say, relaxed style of an entry. But obviously, it will give me less size if my entry point is not that ideal. So I just want to know if there's any balance in between, like do you entry with the fixed initial position size, no matter what, and you will just use the setup as your measurement of the risk, or you prefer to use the line in the sand as a
Yeah,
reference?
I'd say no way. You need to be sizing based on the expected value of the setup. Like I think the people that do that are so asinine, right? Because like it's like saying, imagine if a poker player said, anytime I get 10 jack or anytime I get jacks, this is how much I'm gonna bet. You would just be like, what the fuck? Like, what if you're in the hand with like, what if you're out of position? What if 6 other people have already called and raised? You're still gonna bet the same amount no matter what when you have jacks? Or like, what happens if you're just against some dude that's super loose and bluffs a ton and you have jacks? You're still gonna bet the same amount? Like, you need to always bet based on the expected value. Again, not everyone does that, and people can still find success, however, but a lot of what I teach is based on what is optimal. The optimal thing is, in an ideal world, every single bet we placed would only be if there's perceived positive expected value, and every bet would be sized based on how good a trade is. So like SMCI, for example, in no way should, like in an ideal world, I'm betting way more on this top day because it got even better than that day. So no, I don't believe in like the quality of the setup and how good the variables are. That's what dictates to me. And the other thing I would say is that's again where the geometry comes into play. You might be asking, but how can you tell how good? Well, if this setup was only 100 points from the moving average and it wasn't that capitulatory, I'd be sizing way less. Now, what if this gapped up to 1250? If this is all the way up at 1250, the reward is an extra couple hundred points bigger. So I'd be sizing up even more. So long story short, I think it's ludicrous to think that way, even though some people do it and it works for them, fine. But you really, at any given moment in time, your sizing should always reflect the expected value.
Thank you so much.
Yep, appreciate it. Thank you. Oh, I got one more question. Hold on. Where'd that guy go? Walking through daily routine for building the short list of stocks in play before the open. Yeah, so essentially to find that short list of stocks, it's a mix of using Stock Fetcher to find out what stocks are doing really interesting setups. Maybe they're super oversold or overbought. It's also then going through anything with news. A lot of it comes from like what had news, what had earnings, what had interesting news, what's gapping up or down. So I have filters in the morning based on biggest gap up, biggest gap down, highest pre-market volume versus their normal, versus normalized for the ADV. And so I'm just trying to find like what are all the stocks that are moving and doing the craziest thing. What are the IPOs? What catalysts might I have during the day? Is it a Fed day? Are there any PDUFA approvals, bullshit? Are there any court decisions? So that short list of stocks pre-market is coming from a mix of that. Mostly the stuff that had news. So I would probably say it tends to be, and again, it really depends the market we're in, but I would say 1/3 from Stock Fetcher and just stocks that are doing crazy up or down. 1/3 from my morning scanners, what's doing a ton of volume, what's up a high percent or down a percent, then just going through the news each morning, earnings, catalysts, blah, 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 any IPOs, stuff like that. Let me know if that didn't answer it, but it's a mix of those. And the more you do it, the more you refine what you should be looking at, which again is a little bit of an art and a science to know where to look each day. Any other questions? Otherwise, I am inclined to start to wind things down, or at least call it a 7 p.m. Eastern cutoff. Any other questions while I have you all? Like I said at the beginning of the call, I am going to be emailing this out to everyone. If I did not, if I somehow messed up somewhere, you're welcome, Sergey. Glad you liked it. If I any specific, so the scanners I use were not Bloomberg, but just custom software that were largely just like the scans or the trade ideas. It was a lot of, I mean, you can even build this in Thinkorswim. Like I've had people build the same thing. Like it was so not Bloomberg for the scanners. Bloomberg I mostly just used for news, but it would be just like in Thinkorswim, scans, trade ideas, whatever, percent up the most, percent down the most, like gapping up the most, gapping down the most, then what is then also what is doing the most volume. You're very welcome. Thank you for attending. So that's what I used for the most part for the scanners. But like I was saying, I will be sending out this recording. If somehow I miss you, I know a lot of emails came in very scattered for me. If I miss you, just shoot me an email back. By the nature of you being here means you got the link to begin with. Again, thank you guys. Thank you. Any final questions? I hope this was all valuable to you all. If anything else comes up, you know, just throw it in a Twitter comment somewhere and I'll get to it. Yeah, I appreciate the support and I think it all goes to a good cause. And I like to hope, you know, if you're US, this is tax deductible, by the way. I'm going to send you donor receipts and all that. And I just hope it was valuable to you all and hopefully it's accretive to your trading and we will see stuff like this again, without a doubt. Again, I would say actually I see probably 0 to 2 of these a year. This is not a once every 5 year or a once a decade thing. So you all are very, very welcome. Definitely from the bottom of my heart, appreciate it. All the money, you know, definitely does go to a good cause. It is not going to me. I donated an equal amount. And so, yeah, I'm glad you guys liked it. Seems like
Thank
that
you,
might
Lance.
be most of the questions. Yeah, thank you all and appreciate the support and let's keep on rocking it. And any other big stuff, maybe I'll do more of these and do repeat, you know, discounts for all you guys and all that. And yeah, I appreciate it. And if that's it, then let's call it a day. Everyone have a good rest of the weekend and let's see what these stocks hold for us during the week. And, you know, if anything else comes up, I'll do like a follow-up video or something. So thank you, everyone. I'm going to call it and wish you all the best.
All right. Thanks, Lance.
Nice. Good night.
Peace, guys.